Good morning, good morning, good morning. Yes, we are back. It is myself, Rich McDonald, and the wonderful, questionable, that was in the script, Ronnie. My mother sent a text saying, "Isn't Ronnie funny?" yesterday.
Yeah.
She never said I'm funny.
Well, a mother always tells the truth, mate. For example, my mom tells me I look horrendous without a beard, so you can always trust your mom.
Looking. Isn't Ronnie funny looking?
No, I don't believe that.
The end of the text, it was the read more. Right, so we are Thursday, the 20th of February. There are so many results coming up. I don't think anybody wants to hear about Ronnie's night last night, watching the football, missing his bedtime, missing the alarm clock. So we're going to crack on.
Okay, yeah, let's do it then.
And let's look at what's coming up on the show of the day. Your favourite trading show in the UK.
In the world.
Well, potentially the only trading show in the UK.
Yeah.
Good morning to you all, Monkey Man. Thank you for the story on Nicola yesterday. Good morning, Supersonic. Good morning, Boise. Andrew McKelvey. Wood Group. That's right. We've got that story. A little bit like, well, we'll go into that shortly. Dave G. And Julian coming up on today's show. They want to know what's going to happen, Ronnie.
And we'll give them the answers.
At some point soon. So, Caleb and Terence back in the gallery this morning. Trader Tools with Tom Wostoves coming up at 8:40. But most importantly, it's not even on the coming up slide. Angie's back.
Angie's back. We've all been waiting eagerly.
We've been waiting. Oh, the Muppet Show is over. We're back to the professionals. 8:58. All sessions opening bell with Big Will. There might be a last-minute substitute here. We're waiting to see. Trading experiences with James Gordon. That's right. James is back. No smashed keyboards today. And then at 10:05, we got trade expectations with your countryman, Patrick.
So it's visible in the screen. It's just like, loyalty,
Is it Viking?
Yeah, I don't know.
Right. Okay, we are moving swiftly on. We're going to go straight away to overnight action because there are so many numbers to get through. Right, amongst others, we have Rio Tinto, Mercedes, Lloyds, Schneider, Renault, Airbus, Centrica.
I think that's about it.
Schneider.
Schnitzel?
Yeah, we've got all those coming up for you. But since Andrew McKelvey has demanded the story, we've got, yes, John Wood, finance chief, forgot that he wasn't a chartered accountant when registering his CV. Now, this is a little bit like, Ronnie telling us that he was up 45%. We just assumed that it was real. He didn't disclose it was a demo account. Now, we're not going to sack you for it. You don't have to resign for it. But it's just we feel let down.
I completely see your point. You're valid. You're heard, Rich. I want you to know that I care about you. But the story here, John Wood, this is borderline fraud, Mike Ross suits, he's lying on his resume.
It's an honest oversight, describing that he was a chartered accountant rather than a certified practicing accountant.
Potato, potato.
Potato, potato, and probably about 4 years of exams. But, of course, this came out after the profit warning that was released a couple of months ago.
And the major issues with the accounting.
Yes. Exactly.
Just a coincidence.
So, and Steve Davies, is he related to Rachel Reeves? And there was another one on the government yesterday as well. Another slight mistake in somebody's description of their job title.
In the government?
Yes.
I must have missed that. Do you want to fill me in?
It was. I mean, who cares about MPs? But it was one of those ones that was just a slight. It was one of the ministers that was a slight exaggeration of their previous experience.
Yeah, you should see my resume.
I did wonder how you got in the door.
Yeah. Let's move on. Let's move on.
Right, we are gonna go. What do you think is the most hard hitting? Well, Lloyd is probably the most well held, okay, including by myself. It is boringly in line. It couldn't be more in line. And let's go through the exact the numbers themselves. So net interest income beat expectations by 1%. Total revenues beat by 1%. Costs missed by 1%, leading to an underlying pre-provision 0.5% ahead of consensus. Right, couldn't be more dull. They have made provisions for 899 million for the year. So
700.
No, the 700 is for the insurance.
Okay.
It's 899. I think we can call that 900. And that is, remediation costs. EPS 0.063. 12.3% return on tangible equity, net interest margin of 2.9%. Not, blowing the lights out. like,
Well, it's sort of
like the other UK banks.
yeah, but it's quite typical for them. But I think in Lloyd's situation, with everything going on with the motor financing and everything, I think they're quite happy with a boring inline
Yeah, true.
earnings.
True. Okay, so Andrew McKelvey, thank you very much, updating me that it was the business secretary. He said he was a solicitor, but never actually was. He was a trainee solicitor.
You know, I started as a trainee here as well.
Yeah, and
look at me now.
you don't call yourself a PCM yet, though, do you?
No, I'm a premium account executive.
Account executive.
Yes.
Nice. Right. So that's Lloyds. What would you like to take us through?
Cheeky bit of Anglo-American. We touched upon them earlier during the week when they spun off their, was it aluminium? No.
Amplats.
Amplats that they spun off. But yeah, they came in with their earnings yesterday. So full year adjusted EBITDA, $8.46 billion, which is below the 8.68. Net loss of minus 3.07 billion versus the estimate profit of 455 million. So massive loss there. And then we had the paper loss of the 2.9 billion impairment on the beers, who will never see your business because you're a bachelor. And they did announce plans to demerge Anglo-American Platinum, but they will retain a 19.9% stake there.
Yeah, which was more than expected. It was slightly different. Do you see what they're doing? They're rinsing $600 million from Amplats, increasing debt at Amplats, and giving themselves a nice payout before they divest it.
Oh yes, that's shareholder interest right there.
That's right. Yeah, or robbing Peter to pay Paul. They are looking down 2%. So Anglo-American, a very early call, looking down 2%, as is Lloyds, looking down 1 to 2. Do you want to do a positive or a negative here?
I am an optimist, my friend.
You're an optimist, right?
Yes.
Then we shall look at Renault. Renault looks good. A real nice 2.67 billion income versus 1.72. Revenues 56.2 versus 54.4.
Operating margin came in, however, at 7.6 instead of the estimated 7.74. But that's all right. I was discussing this with Fred this morning, and he said, "Yeah, Renault had excellent results." And I said, "Yeah, but they missed the operating margin." Oh, sorry, I'm just reading the French news. So you just get the good stuff.
But this, I mean, I see you in a Clio or something. Do they still do Clios? Megane?
I'm more of a Toyota man myself, actually. Reliable, never breaks down. I learned how to drive in my mom's Toyota Avensis.
Did you?
Yeah.
Nice. Fred's more of a Volvo driver.
Oh yeah, we have a lot of good long chats about that.
Right, Centrica up 3 to 5%. Centrica numbers are looking good. What do you think of those, Ronaldo?
Yes, so Centrica came in with, they beat on EBITDA. They announced, don't get too excited now, 500 million pound share buyback.
Jeez, even they're at it.
Yeah, outlook is unchanged. Their dividend is 3p, and adjusted EPS came in line. But they also beat on full year revenue, 2.4 versus, 24 spot 64 versus 23 spot 76. And they also beat on full year net adjustments, profits. So we're doing good there in Centrica. We're happy with them.
Yeah.
Happy for them.
Decent.
But one who didn't, Rio Tinto.
Yeah, not great.
No.
Not great.
Underlying earnings down 8%. Dividends at 4.02, which is a 5-year low. Iron ore operating profit was down 19%.
This is interesting because Rio's has always been, in the mid 70% of its total revenues and income is iron ore.
Yeah.
But because iron ore has dropped so much and they've actually done quite well in copper, then it does make it, a little bit more balanced than it has been for as long as I can remember.
And it was funny as I was reading through my news this morning. So I have one email that says Rio Tinto urges shareholders to remain listed in London. And then the next email was Glencore considering moving away from London.
Glencore is a really interesting one. There's a lot of press about it this morning. Some of it more favourable than others. But let's have a quick look at the business section of the Times. And you can see here that the John Wood story is the highest HSBC. They cover the big costs, workforce cuts there. He does say mainly coming from London as well, from the HQ in Canary Wharf. But, if we get down to the Glencore story, then it covers this move yesterday. The stock was down 7.5%. 7.5%, only beaten by Palantir.
This is just a minor retracement.
As the weakness yesterday. So, now the question is, more than 3 billion sterling was wiped off the value of Glencore yesterday. The CEO said, we are considering a potential move. Where's he going to move to? America, you had literally corruption, Department of Justice investigation against you and massive fines.
Swiss exchange?
No, it's either Australia or America.
Well, America won't have them.
I mean, admittedly, 50% of their shareholders are in the US.
Yeah.
So it kind of makes sense. And the coal business, the Americans just accept this dirty coal business better because it pays off a lot of cash.
Yeah. But more importantly, is Glencore looking like an attractive buy now with this drop?
I've got to say yes.
I'll get you there. I'll get you there.
You with me?
Yeah.
We agree on something.
Yeah, surprisingly, you know.
Pete Ward, get the order into the open. I mean, look, there's a price target cut today. Okay, we're going to see that in a minute in the upgrades and downgrades. But Glencore at this level, what did we get down to? £3.30 was it yesterday?
It's looking exciting, if you ask me.
Well, it's already opened on the South African Stock Exchange, so it's down 75 basis points. And that's the point. We should have a look at Anglos in South Africa to see how it is trading. 328 Glencore. For me, that's in the pension. I'm going to buy that in the pension today because...
you know what? I agree with you there. That's a long-term buy. Did we cover Benz, Mercedes-Benz?
Let's just quickly look. When you've got numbers out and the stock trades in South Africa at this time of year, always worth looking, right? Because it opens at 7 a.m. and gives us that guide. So we are looking roughly down 1.5%. Oh no, it's just changed. Down 20 basis points. Where did we close? 556. But yeah, putting that into Rand, then we can see exactly where that's trading. Looks to me like it's trading around about 548, which will be, 1.2%, let's say we're calling Anglos down on the open. Now, Mercedes.
Oh yes, this one hurts quite a lot actually. I have an emotional connection to Mercedes. My dad was a cabbie, as we all know, and he only drove Mercedes cars because he thought they were the best ones.
Right.
So I was brought up with the knowledge that Mercedes have the best cars in the world. So it hurts me when I see that their full year group sales are down 4.5%, and their automotive earnings before interest and trade-offs is down 41%. And 2025 free cash flow is expected, I'm quoting here, significantly below prior year.
Yeah.
It's rough.
It is just this continued dull, dour rhetoric from them.
Yeah.
For the guidance, they are guiding towards return on sales of 6 to 8%, between 6 and 8%. Excuse me, the expectation was for 7.9, so still within the range there, but they are getting called down 3%. Mercedes down 3.
Yeah.
Is that going to take the DAX down to further That beautiful move, everybody celebrating around about midday yesterday. I was on the way to lunch with Pete Ward. We took out a wonderful client. He used to be head of UBS trading desk.
Oh, wow.
Sales, sorry. And he's a real character. And he started in 87. So he was on the floor in 87. And his stories, and of course he went through the crisis with UBS. He was Goldman's as well. But yeah, so we were on our way to that, and suddenly the DAX falls out of bed. Something everybody's been waiting for.
I think a lot of people are cheering right now for that. Yeah. But my hopes are they remain strong for Mercedes, purely out of an emotional perspective, no rationale behind it. Because the facts remain that the automotive industry in general is having a really tough time, especially in Germany. It's not getting easier with the steel tariffs that are coming in from the US and the tariffs there. So the whole industry in itself is having a rough patch.
Now, if you have tried to short the DAX over the past couple of months, what would Axel say?
This is just a minor retracement. The trend is your friend.
Once more, hit the right button.
The trend is still your friend.
Caleb's been waiting for this one.
This is wonderful. Caleb has taken
loss?
sound bites of Axel and put them into the soundboard. I think it's just brilliant.
It's actually true. He flexed his soundboard to me, and it's just a bunch of buttons with Axel quotes. So when it'll be too much, I might have to tell him to. When you get too much for me, I might have to tell him to hit the stop.
Yeah. There's a
The
few
high,
that
action high, reaction high, simply a high, which is higher.
It's just it's like we can have AI Axel all the time.
Yeah. Soon you won't even need me, mate. One can only hope.
I think that's the crickets one, isn't it? No.
Caleb, bro, come on.
Right, somebody take Caleb away from the board. We're going to cover Palantir now, right? The absolute, it was always going to happen. It was always going to happen because the retail are in, and they just believe that Dan Ives, the biggest bull in town, with his $120 target on Palantir, what retail think is that if Dan Ives puts a 12-month price target on it in January, they take it straight there, straight to the price target. And they just do not understand that is a 12-month target. It's if Palantir reach their future earnings, it is possible that they can go as high as $120. No, retail take it straight there. So, boom, in the face, $106, down 14%. And that was on the back of
the 8% cuts in the military budget for 5 years every year.
8% per year.
Yeah, that's what I said, for 5 years.
Astronomical. That means that in 5 years' time, the budget is going to be the amount lower is the whole of European defense spend.
That's insane. I mean,
Trump is looking to cut US defense spending by the whole of European defense spend.
Well, I don't know what's more interesting about that, the fact that they're trying to cut it with entire Europe's defense budget, or that Europe's entire defense budget is just a cut in the US budget. But I think what makes this even more interesting, and the sort of massive drop, is because a lot of people were expecting that Doge would be something that would be beneficial for Palantir with the cost cutting and the streamlining of processes. Now this coming out, and with over 50% of their revenue coming from military and government agencies, they are now taking a hit. So this sort of, the momentum has shifted for them. However, what I think is important to keep in mind for the longer term view for Palantir is that they're no longer in a position where they're solely dependent on the military and the government budgets. They've also built up a separate enterprise business where roughly 45% of their revenue is derived from. And they have about, I think the average income per customer there is $65 million. Mm-hmm. As they only go after companies with over $500 million in revenue.
Look, for me, this isn't a Palantir story, right? It was just because this thing was massively overbought. The wrong people are in it. It hit stop losses. They all got it on leverage, and it puked, right? And rightly so. It's $100 share. It's not $125 share. This story is about defense spending and the absolute fantasy that European defense stocks have been on recently, right? British aerospace up from £12 to $13.30 in the last week on this imaginary European defense budget that we've got, right? Rheinmetall up how much? 20%?
Rheinmetall, you're just salty because your girlfriend bought it before the Ukraine.
She's had it since 150 euros. But this move from 730 to 930, dream on, right? Trump is going against Zelensky for a reason. And it's not because what he thinks about Ukraine. It's because he wants to save money in his defense budget.
Yeah, 100%.
Now, what he doesn't want to do is screw over Lockheed Martin, Northrop Grumman, RTX. So all he's going to do is threaten Europe. He's going to force them into spending more. And then he's going to threaten them if they don't spend it with American companies and he buys American defense, then he's going to tariff them. It couldn't be more obvious. It's the art of a deal.
I quite like it.
What's not going to benefit is European defense companies.
I think European defense companies are a bit overvalued, especially because now they're all based on the sort of hype and the rumor, or the sort of, we all need to spend more, but no one has the money to spend more. Everyone's in a deficit. Everyone's borrowing insane amounts. So I don't think that we'll actually see a realization of this expected revenue. However, Palantir, I am bullish, and I have a bet for you, my friend.
Okay, I'll be interested in this because I'm very simple. I'm short the 125 calls, the 135 calls, and 165 calls. So if you tell me it's going to go to 150, your bet's on.
When?
I think I've got.
What's the expiry on this?
June.
150 by June.
150 by June.
You're on, mate.
What's the outcome? What's going to be happening in June?
There's midsummer. Okay, so whoever wins, whoever loses, have to buy the other one. Aquavit shot midsummer.
Okay, so the 20th of June. That was a good one. Right, the 20th of June is a Friday. Perfect.
Perfect.
Right, so has to buy the other one of what?
Aquavit shot.
An Aquavit
shot.
3 Aquavit shots.
3? Mate, okay.
The loser has to buy them and drink them.
Okay.
I don't know what they are, but...
Fred's buying the steaks.
Yeah, actually that's Ascot as well. Good
Ascot,
point from producer Fred.
Yeah, I'm not invited there, but...
Right.
Shocking.
Okay, we got 30 seconds until we go for a break. We've covered Renault, Mercedes, Rios, Airbus. Airbus actually looks pretty poor.
Yeah, they missed deliveries. 820 planes delivered versus the estimated 138, spot 77. I'm not sure how they're going to deliver 3/4 of a plane, but they have really not capitalized on the Boeing's downfall. So I am disappointed in Airbus.
Yeah,
never trust the French.
Sure,
as one would say. Not me.
Well, I think they're more European, aren't they?
I mean, it's a French company, no?
No, it's a European company.
Oh, well, sound like an American now, mate.
Airbus looking down 2%. Right, we're going to a break. We'll be back. We're going to give you upgrades, downgrades. We're going to look at the open. British aerospace should be down 5%.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Right, so just to run through exactly what we're talking about, the defence budgets. Each country in Europe: Germany, 67 billion, France, 61 billion, UK, 75 billion, Italy, 35, Spain, 23. That totals around about 250 billion. US defence budget, 950. They want to cut it by 8% a year. So they're looking around about 75 billion cut per year, right? Now, British Aerospace earns 43% of its revenues from US defence contracts. Have a look at what Lockheed Martin has done over the past 5 months. So Lockheed Martin dropping from 600 down to 433. British Aerospace, it's 43% an American defence company, right? Then that is, these graphs kill me every day. From October is down about 3%. So that's where British Aerospace is trading on these fantasy numbers that European defence spending is going to go up, and they're not going to get hit in the US. You ready to ring your bell, sir?
Yeah, but I am, it hurts me to say, but you're actually making sense here, mate. You're actually making sense.
So it's very hard to make sense of Trump, but in this instance, he wants to save a lot of money.
Is Lockheed a buy?
That could be a shout. That could actually be a shout. Buying Lockheed, selling British Aerospace.
That's a pair trade we can make.
Because he's going to force Europeans to buy from America. So, right, EasyJet down 2.2, hurts me every single day. British Aerospace down 1.5. I'm going to put my money where my mouth is and sell those at 13.24. I think that should be down 5%. Rio Tinto down 75 basis points. HSBC down 60. Where's Lloyds? My apologies. Let's take out, right, Lloyds at the breakout point. Okay, let's do a quick check to see where that is compared with Axel's level that we spoke about yesterday. We need it to get to 64.6, another 1% for Lloyds, and we're in breakout territory.
The high, reaction high, simply a high, which is higher.
Brilliant. Okay, Glencore up 50 basis points.
Surprising.
Well, that was yesterday's numbers.
Right.
So it was down 7.5% yesterday.
Cheeky bounce back.
Recovering up 50 basis points here. Right, the big European ones. No trade on those German autos yet. Uh-oh.
Volkswagen coming in, Porsche coming in the red. Ooh. It's not looking good, bruv.
Let's take a really quick look at those upgrades, downgrades. I promised you before I went into my defense rant. Upgrades and downgrades. Today we saw a downgrade at Glencore, but it was to a £4.40 target. Right, so a £4.40 target. The stock's trading at £3.30. So you've got a decent upside there. But RBC are good in UK mining stocks. BP upgrading the price target to £5.10.
That's very rational. I agree with that.
Quite like that. They're, you know.
Are you in BP?
I am short puts at the £4 level. £4.20. I'll have to check. UBS, Morgan Stanley downgrading to equal weight. UBS 34 Swissy price target. Still benefiting from the biggest corporate theft in history.
Yeah. In history?
Yeah.
Okay.
Right, no trade on Schneider yet. No trade on Stellantis. BMW's down 1.4. Mercedes opens down 2.2. Not.
It's not as bad as one would have expected it.
Yeah.
And it's actually seems to be coming back.
Lloyds straight to that level, up 2.8% at that breakout territory. Is this the day Lloyds breaks through for the first time since 2006? It's been waiting. It's watched its brother Barclays, its sister NatWest do exactly that. And is this now the time?
We should take profit on this trade. Oh, wow. It is.
So that takes us back to, 23rd of October, that one is. And Lloyd's now 64.76. But let's take you right into, apologies, my fat fingers here on the chart. Oh my goodness, what am I doing there? Let's go into a shorter 3 hour. Right, I give up. Forget that one. We'll come back to that. Schneider up 6. Wow, the CEO was on CNBC this morning. He was sounding very confident. He had an idea what was about to come, I think. So yeah, Schneider up 6. Let's put it to your top of your board.
Yeah, stronger margin and beating estimates, much thanks to the data center demand.
Oh, Renault is down, but I just want to go to, we had a point on the chat there. Who was talking about John Woods? Oh, that's all the bad news out there. It was Steve Davies. Steve Davies, would you say that Wood Group has had a good clean out of its bad news? Somebody's taking the hit for it now.
They've found their scapegoat, but I think that the actual issues that they have with the losses and the write-downs, I think we're yet to see a couple of more quarters where we're going to see poor results and disappointing earnings. So I'm not very optimistic on... I think, the bad news is out, but the consequences are yet to be lived. So I'm not very optimistic on them.
Okay. But John Wood up 2.5%. It's only 25 pence stock. My goodness me. Anglo's up 2.5%. Interesting.
Very.
Interesting. £24.30. Stock usually bottoms around that £3 level. NatWest following Lloyd up 50 basis points. Whitbread, interesting one. How is the hotel sector doing in the UK?
Well, we were quite surprised to see that Intercontinental fell after their quite positive results. But as we've seen prior, tourism has been rising. And we see private equity investments in hotels, so it seems like it's doing quite well.
The one thing I'd say about that, which is why I'm interested in Whitbread and bringing it up at all, is if we look at the wider chart, and I only know this because Pega I am going to have a word with somebody today about charts. Now, Peg has been hurt in this, being short, right, from October. Look at that. The stock's gone from £80 to £100, right? Yes, you're absolutely right. It was overdone going into numbers and it's come off. But it is the opposite for Whitbread. If you have a look at Premier Inns here, which is basically what Whitbread is, right? If we have a look at the way that this has come off, yet again, another chart which is distorted, then we have seen it since October from 33 to 26. It's down 20 in the time that IHB's been up 20.
So the 2% up is more of a recovery than a rally.
Yeah.
I mean, well, doesn't this play into the theme that we've been talking about? The consumers are spending less, but they're spending more on premium or mid-range premium rather than spending on, trying to get more for their buck and go for these budget options.
But Whitbread is budget, yeah. So you're saying they've gone premium now?
Exactly, premium, mid-range premium, away from the budget.
Yeah, I don't know, but in the UK, apparently we're in recession.
Does it feel like it?
I mean, it does not if you go to any of the hotels in London and trying to get a
they're packed.
room.
They're packed.
Right, Centrica, producer Fred and Andrew McKelvey. Centrica up 8%. This is really, really interesting now because that takes it up to this level last seen in May of last year. Centrica, not one that I look at. I used to trade it for Macquarie back in 2018, but it's right at a level you can't see it because it's only been trading a couple of minutes, but that previous high is 148.5, right? So we're 1% away, and look at this thing over the wasn't expecting those good results, was it?
No, but it's also, we've seen the sort of continuous rally of energy companies. They've sort of come up on it. BP's been the exception, of course, but we've seen it across the pond. And I feel like now, finally, the UK energy companies are taking advantage of this. We've had a pretty cold winter as well, so.
But it's suddenly got warm. Have you noticed that?
Yeah.
I thought we were still on 7 degrees because the weekend was so cold. We're on 14 degrees this week suddenly.
Yeah, I've noticed that because now I don't actually have to zip up my jacket all the way up when I walk into the office.
You started sweating again, haven't you?
Yeah, unfortunately.
Right, Harry Nair. It's the planner he's talking about is the Stock Trader's Almanac. So that's right, my one of my favourite purchases around about Christmas time every year. So, sorry, Caleb was just going in there. Stock Trader's Almanac 2025. It gives you two things. It gives you a quote every day.
From Axel.
And I'm going to read this one because it is from the great and recently departed Art Cashin, who was the biggest personality on the New York Stock Exchange floor for 30 years. There is nothing more powerful than a market that has changed its mind.
Interesting.
Now, Thursday the 20th of February, the book also gives the percentage chance, looking at the past 25 years, on Thursday the 20th of February, what are the odds that the S&P will be higher on the day? 38% chance. That's one of the lowest I've seen. Considering markets go up all the time.
Do they?
38% chance that S&P is going to be higher today. Well, let's look at how it sits with those futures. Ronnie, have you seen the weakness in futures this morning?
I have, unfortunately, as I checked my Vanguard account.
And what's the big reason why this is so important? Expiry tomorrow. Big February expiry. Big February expiry.
Rolling over the contracts. So it's going to be interesting to see what the sort of profit or loss realizations will be coming forward today.
Yeah, so 61.25 we're looking. We did get a late rally yesterday. US tech is a little bit off its highs seen recently. I thought Palantir might give people a bit more of a wake-up call. But no, alas, we are only What, 200 points off the high? Yeah, a little bit more. 200 points off the high. Right, Carrefour.
Sorry, US tech. I'm not very optimistic on US tech. I think the Mag 7 is having a difficult time. The capex, all of that, the AI hype come down, and the sort of now it's the LLMs becoming a commodity. I'm not very bullish on the US tech actually, as I used to be.
What would be your trade the other side? What would be the long?
Russell 2000.
Okay.
I think we'll see a stronger American consumer. We see a lot of spending there. And Doge are actually saying that they might send out $5,000 checks to US taxpayers in savings. If we see that happen.
Sosnoff was talking about this last night, and I mean, you're just bribing people.
Yeah,
you're trying to cut costs of your $2 trillion deficit that you cannot afford to run because your interest payments are now bigger than your defense expenditure in a whole year, and it's going from 1 trillion to 1.5 trillion. So they're trying to cut defense costs, but the amount they cut defense by over the next 5 years is what their interest is going up. So net, nothing changes. You still run a budget deficit. You're still on an unsustainable debt path. France, Carrefour, down 7%. 7%. Oof, this is, look at the monthly chart on this one, people. No, I can't. Producer Fred's setting me up there, trying to wind me up. Here's a oh, wow, that is value destruction in French supermarkets.
Can producer Fred let Rich know in his ear, is France experiencing a similar story that we do in the UK, where we see consumers moving towards options such as Lidl and Aldi?
Yeah, he says, oui, big time.
Big time.
Big time, they go for the Lidl.
The Lidl foie gras.
He's on the phone to Pega.
She's
the head of HR.
She's,
right, but let's have a look at Tesco in the same...
You were joking there, right? Yeah.
No.
Oh.
So, right, there is the last 5 years in Tesco. British supermarkets over French supermarkets. Did somebody say Brexit? Brexit was terrible for every single business in the country.
Except for the
Tesco outperforming Carrefour by 50% over the past 5
Tesco is borderline a conglomerate at this point. Well, they sold off their banking operations, but they still have their mobile and all the other stuff. But yeah, Tesco is an interesting stock. More interesting than Sainsbury's, I'd say. Definitely more interesting than Carrefour. How long can this continue for Tesco, is my question to you.
My mother is on Tesco Mobile. That reminds me, she did text me. She is watching this morning.
Mama McDonald.
She'll love that. Well, she won't. The very fact that I've had a picture of her up here next to Mrs. Doubtfire, then I'm surprised she's...
I'd never do that to you, Mama McDonald.
Right, so let's go back over what is happening in the UK today. We are seeing Lloyds hasn't managed to break out, only up 1.8 on the day.
Look at Centrica, mate.
Centrica,
the high,
however,
reaction high,
is...
reaction high, simply a high, which is higher.
Yeah, I don't like that one as much. You're missing the... Why would you short that?
Why would you want to short that?
That's the good one.
Keep trying,
To
Caleb.
reduce the risk if you use it correctly.
Anglo-American up 3.6. Who's the biggest loser? It is, of course, BAE Systems. Still not down enough, in my opinion, and I have been wrong on defense.
No,
but it should be down more than that.
Yeah, but I definitely agree with your point that you made. It was a good point. I don't think that we're going to see European companies benefiting from this increased spend. It's going to come from American companies. And in fact, even though we have big European names in the weapons industry, we also need to look at other countries such as South Korea and Turkey, who are exporting a lot of weapons. They're increasing their weapon exports. So The competition is quite strict there.
Yeah.
Poland bought a bunch of tanks from South Korea. It's not something you'd say 10 years ago.
Wow.
I can tell
Good
how
knowledge.
interested you
Very
are.
good knowledge. Neil has renamed them the Lag 7.
The lag 7, yeah. I mean,
Genius.
this year it's quite accurate, but I think they're now trading at a normalized level rather than what we saw last year.
I think that could really take off. I'm going to try to get that trending on Twitter.
Lag 7.
Yeah.
And you're
I
gonna
like
take
that,
you're gonna
Neil.
take credit for it as well.
No, we'll have to give it to Neil. Right. Nat gas. Why is nat gas rocketing when Ronnie's sweating with the weather? Let's have a look at that. Maybe I'm looking at the wrong. That's on a monthly chart still. So let's look at the 4-hour chart. Yes, it is. It's up from 3,600 to 4,100 in the last couple of weeks since Ronnie spent Valentine's alone. It is getting stronger.
Sorry, I was just a bit confused by the racial hate crime I just was victim of.
What, you against France?
No, you saying I was alone on Valentine's, I mean,
Do we have breaking news? Your father was asking,
No.
Are you getting married yet?
not yet. I'm still waiting for you to set me up, mate. The matchmaker.
You could be number 8.
Yeah, Scottish Cupid.
The Scottish Cupid. Right, we're getting towards the time to take a break. It is, what have we not covered? The mining sector.
The mining sector and also European, in one company that we don't often cover, a sector that we don't often look at all is insurance. Zurich. Is it Zurich or Zurich? I say Zurich.
Zurich.
Producer Fred.
Oh, nice. Look what we've got there. Up next, fast market.
Yeah, very cool. Zurich has record earnings and they also raised their dividends. That's a defensive sector and a company that I would look at for, sort of as a hedge.
Right. 2 last things before we go to break. Glencore, I am going to put an order in because I don't want to forget that. So order to buy 4,000 at 323. Okay, so that is going in. And I remember about that because yesterday, midway through lunch, my phone pinged and suddenly I was long with JD Sports because I had an order in there for 3 weeks.
Why would you? I have the opposite of the Axel. Why would you want to be long that?
Well, because it
Why would
dropped
you
to
want to short that?
80.8.
You're catching a falling knife here, mate.
Yeah, but it has bounced off that level before. There's a price for everything, Ronaldo. And that was this previous support level. On Wednesday, 22nd of January, it dropped to 80.8. Next time I looked, it was up at 84.5. So I do want to start. Now, it wasn't a big one, right? It would be, so it was 10,000 shares. It would probably be less than a third of the position that I would actually want to own, right? So I'm building into it. 80, 79, 78, 77. But I had been waiting for about 3 weeks to buy that.
Looking at the chart, it makes sense. Looking at the company, it doesn't. We'll see. Fundamental versus technical.
You don't like, and you are, I appreciate that you are a hawker owner as well, because I am getting hurt in Deckers. This
Where's
thing
the
now,
stop?
this is a falling knife. This is a falling knife.
Oh, mate, I need to go make some. I need to go make some purchases.
Well, I'm short of $150 put, so I might be able to give you some stocks in. Don't worry. Good stuff. Right, Andrew's back and excited to get in here. So I am going to go and get my coffee and donuts on the diet. We will see you, first of all, with Ronnie, and then Tom, work from home coming up soon as well, because he's in the office. I can hear him outside.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
You can find a variety of asset classes on the sidebar menu to the left of your platform. It's now time to pick an asset class. There are 4 major types. 1. Shares in individual companies listed on global stock exchanges. 2. Indices, a group of shares measuring the performance of a particular region, exchange, or sector. 3. Forex, the value of one currency compared to another, like the pound versus the dollar. 4. Commodities, like gold, oil, natural gas, or wheat. Decide which of these markets interest you and which you know the most about. It's up to you to research the market you'd like to trade. This will help inform any trading decisions you make. You need to know the risk of trading a particular market. For example, some markets react to events like economic releases. Next, look at the market's opening hours and how they'll fit into your trading plan. The deal ticket will let you know if a market is open or closed. Lastly, look at the costs and charges applicable. Once you're happy with your market choice, place a deal through the deal ticket.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Hey, trader friends! Welcome to the show, and we are back with Ronnie with Fast Market. So pleased to be here and pleased to be back. Thank you, all you that messaged whilst I was away. Ronnie, have I missed anything?
Yeah, you've missed so much.
Your bets. We need to get a screen up there of the bets that you had many bets with.
Yeah, we have me and Rich. We're
the ball bet.
Yeah, 2 degenerates. We've got quite a lot of stuff going on.
I'm still watching gold because I'm rooting for you.
Yeah, no, I have my friend in new business, the sales guy in Stockholm, who's sending me daily reminders that I'm well on my way to lose that bet.
All right, let's get on to some of the very exciting stuff that we're covering this morning. Zurich Insurance, you talked about this earlier, and I can tell you that it is now on the move, up more than 2%.
Yeah, it's last time it traded at this level was back in 2001, so 24-year high that they're trading at. I think it's really, really interesting because this is, insurance is the type of company that you don't really look at. It's not sexy, it's not AI, it's not whatever, but it's stable, it's got great cash flow, and the demand is continuously growing. So Zurich is a great sort of defensive stock that I would add to my stock portfolio of demo accounts.
And just showing that chart there, look at that.
Yeah, beauty.
Yeah, what a beauty there. It's really, for those of you that have held on and watched this day, you deserve to pat yourself on the back. Let's have a look at in terms of fundamentals there. Decent dividend yield as well, 4.6%. What I like about insurers as well and reinsurers is that not only do they give you stability, but great diversification.
Yeah.
I was really interested in the fact that at the moment, their estimates for the impact of the LA wildfires is still for me, smaller than expected. I think they're expecting 200 million bucks. I thought it'd be much higher.
Yeah, I mean, it's not massive exposure there, which is positive for them, not positive for the residents of LA. But on the opposite of a beautiful stock and company, word on the street is that you have beef with WPP.
I have beef. I have real beef, and all the our clients and trader friends listening in today, you might have some beef with WPP as well. So my father is a big advertising man, and he led a company in Southeast Asia, which is why we moved from here to Southeast Asia. And it was called Dentsu, Young and Rubicam. Now it was, it was a merger between Japan's Dentsu, which was then the biggest market cap advertising company, and Young and Rubicam, which is a big American firm. It did really, really well, but was a victim of its own success because who swooped in? Who swooped in and bought that company? It was WPP, and it was absolutely hammered and completely. I mean, Sir Martin Sorrell, took this kind of like, no, we're not a relationship company. No, we're going to just go by revenue, and revenue hits this amount, we hire. Revenue falls below this point, we fire. And so I have a lot of beef. And WPP, I have to say, it has been behind the curve. Take a look at that chart, people. Do you like WPP, Ronnie Eggnog?
I don't, but not for the same reason as you. I'm quite pessimistic about WPP because they've had a merger with Omnicom to try to create this advertising powerhouse to compete with, in the light of AI. And yes, they're using AI to benefit them for the cost of content creation and similar. However, I still believe that the increased sort of accuracy of ad spending on Meta, on Google, with these new sort of data that's coming in from the LLMs, etc. I think we're moving away from these sort of traditional big powerhouses of advertising. So my long-term view on WPP and short-term view is quite pessimistic, actually.
And I think if you did want to still have exposure in the space, then I would look at Publicis. Producer Fred would be quite happy I'm putting this one up because I think that they have done a lot more in terms of investment and diversifying their business into using AI as well. They're still saying, don't get me wrong, they're still saying that they're going to see slower 2025. And I cannot tell you the number of times when I've been at dinner parties when, people from the ad world come in and say, oh, we miss those days when,
the madman days.
Yeah, the madman days, and when everyone was was coincided with the time when tobacco was cool, and the industry could advertise tobacco, and you could have more than one client, right, in each sector. Now there's a if you have British American tobacco, you can't have Philip Morris, and you can't have Peter Stuyvesant as well.
Yeah.
Right. And all those days are gone. Now what they do is they come in and clients go, what can I have for free? Right? Is the social media part free? Is the TikTok, Instagram part free? Well, all that should just be cheap or free because it's AI, right? And so they're having a really tough time diversifying. But I think if you wanted to stick your oar in and put money on one, Publicis would be the one to go for.
Maybe that's a pair trade, short WPP with the large cap structure that they have now with the merger. Short WPP and long Publicis.
Yeah, good one. That's right. And Publicis is now the world's biggest advertising group by market cap as of February, dethroning WPP. You were talking about Cisco earlier.
I was actually. Cisco and IBM. I am bringing it back, old school. Old school. Shout out to Rich McDonald. He knows about these companies. So the reason.
Calling him old? Are you calling him old?
Only Rich, not you. I would never call a woman old. I'm a gentleman. So Cisco and IBM, I think they're quite interesting because if you look at the chart, they've been rallying lately, and we've had the Mag 7, everyone agrees that they're valued. Everyone agrees that they're too expensive, but everyone's getting FOMO. They don't want to miss out on the continuous rally because they want that AI exposure, right? Cisco and IBM are two companies that are sort of building on the backbone and having in the background of AI. They're building the infrastructure for it, and they are rallying on top of it. Both of them have come out with positive earnings and raised expectations. So these are sort of like often overlooked because they're old and not so sexy names. And if you look at the companies, Cisco in particular, it's still below the hype that it was at the dot-com bubble. So it's still not trading at the highs that it was at the dot-com bubble, hasn't recovered. So I am very optimistic of Cisco and IBM, two companies that are often overlooked, but they have a lot to give in the AI sector, and they're trading at good values. And most importantly, these are mature companies. They're mature companies, and if you look at the dividend yield, they have strong cash flows. They're paying their shareholders out with cash and not by manipulating the stock price and buying back their shares. Ooh. So Cisco and IBM are two very interesting companies that I would be looking at.
You're alluding to some Bitcoin-related companies there. I like this. I like this, Eggnog, because taking a look at Cisco, this chart, I really like it from a technical point of view, because showing trader friends the monthly chart, then can you see there's been a breakout? What I like as well is that when you go into and drill down to the weekly, there has been a breakout there as well, and also the daily chart. And this one looks like it is going to continue that momentum higher if the news remains. Just taking a look at some of the charts I like as well. Call out to Hari Nair on the chat. Hey Hari Nair, apa khabar sa tentu? I'm really excited to meet you. As I speak Bahasa, and I rarely get to use this language.
Where do you speak that?
So I grew up in Malaysia.
Okay.
And so a lot of my English friends find it quite funny. This is an ongoing joke that when they meet my newer friends, they go, yeah, Ange didn't do Bahasa as an extra language. So
the trend is
she
your
did
friend.
Chemistry. Oh, I hear Axel going trend is your friend. She did chemistry, physics, and all those subjects in Bahasa. So I did all of my GCSEs in a different language.
Oh, wow. That is impressive.
So yeah, Hari Nair, I've got your back here because I have something special for you. I have the natural gas chart. Here we are. It is down 1.3% at the moment, but I really like this chart because we are seeing perhaps the start of potentially a reversal there. Hari Nair, Hari was asking earlier on why natural gas has been on such a tear. And so I was saying that, this is purely because we've had such extreme weather, right? Like you've had so many PCMs and so many people from the Volatility desk come back running from skiing. Yeah. And what have they said? It's been really, really cold and lots of powder, which has been really different to the last 2 years. Yeah. Also in the USA, Hari, the reason why we always keep an eye on the US is because the US is the biggest consumer of natural gas. They are still the biggest consumer out there, and they are having extreme cold weather. And you can find this anywhere on public sites across 48 states, I believe, all very cold weather, extreme weather. But what I would say about this chart is, can you see on the daily chart, we might start seeing the signs of this coming down now. So if you wanted a short, this might be one to look at because if you look...
Why would you want to short that?
Because we are now coming up to the point, and I can send this to you later if you email me at ask@iag.com, data points which show that in the coming week, the weather extremes, the cold weather extremes are going to become milder next week. It's going to start warming up and we're going to start looking forward to spring. You like natural gas, or are you more a WTI kind of guy?
I am quite keen on hydrogen. That's an energy source that I'm looking forward to. Hydrogen, nuclear, and fusion energy. I am none of which you can really trade, but those are the energy sources that I'm really keen on. But if we look at, so we have some other interesting stuff that I would like to cover. Rich and I have been talking about the miners and the European autos. In your opinion, Ange, if the miners, is that something that one should look into? Is that something one should long or short?
Here we are. I'm just whacking up the auto stocks for you. Got BMW, Volkswagen, Porsche there. You got some beef with Mercedes.
No, I love Mercedes.
You love Mercedes.
I love Mercedes.
I love Mercedes too, except trader friends love to hear comments. They know, Mercedes know that they have made a huge strategic mistake because their new Mercedes don't look like Mercedes, right?
Yeah.
They're about to come in with the crook, but handy hit, trader friends, hint here, they have got rid of their Q3C and they only produce the Q3B and the A right now, and Q3C is because they know that their battery isn't performing as well as it should.
Yeah.
All right, we have to get to break, but we'll see you right after
Trend
this.
is your friend.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered, live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
I'm Ben Hemmington and I head up the sustainability function here at IG Group. IG Group pledges 1% of its annual profits and directs this to community initiatives. This is a pretty significant amount of money. We're talking several million each year. And I used to work in the charity sector, so I have first-hand experience of just how much of an impact this money can actually have if it's used wisely. In particular, we are focusing on empowerment through education, so looking to see how we can empower members of our community that are disadvantaged in different ways by providing access to quality education. It's an area of work that we're really proud of and that we're having a really excellent impact in. On the IG Group website, we have a download centre which has got lots of information about our sustainability function. Here you can find out more about our product governance, about responsible investment. We have documents around our diversity and inclusion, including a D&I statement, KPIs and targets, as well as our progress against these. You can also find a number of documents relating to how we manage our environmental impact. And then also on that download centre, you can find our community impact report that talks all about our Brighter Future Fund and the impact that it's having.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Rise and shine with IG's new morning show, Trade Live with IG. covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered, live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG. Hey trader friends, welcome back, and we are joined by Tom, who's going to talk us through some fantastic new tools that have just hit the platform that are going to help us in a week when it's all about inflation and that dot plot once again.
Yeah, how are you?
I'm good. I'm feeling like I'm raring to go. Great to be back. And it's so wonderful as I'm running across the bridge early in the morning, kind of in the dark. Yeah, I was in quite early this morning, almost got hit by a bicycle, but that's okay.
I've heard on your time off you were raving. Is that what you're clubbing? What were you doing?
Glow sticks and it was unbelievable. I mean, we're talking about 24/7 dancing.
Yeah, just constant. That doesn't surprise me.
Like here, right?
You're just a 24/7 party animal.
The pocket rocket.
Is that what they call you? That's a nice nickname.
I wish it were that. In fact, what was happening was I was helping to support my husband because he has got two very ill parents who don't live together. But I have got new skills. I do. And it's always good to speaking of new skills, always be learning here. And I found new skills. I am now an expert in Zigbee plugs. I can tell you, wax lyrical, I can tell which ones to buy, which ones can turn on which lights remotely. I've got it all set up here in case we need to, sort out Nick's parents because they live in Dorset. He's got it set up as well. We can do things like, we've put temperature control, we've put smart monitors in case you might need this in your house for your ceiling, right? So smart monitors in case the dishwasher or the washing machine starts flooding.
Yeah.
So if there's any water that's seeping out, it will alert your phone. We can turn on, I have no idea how many lights now. If there's a power shortage, it's probably caused by us because of these new monitors that we bought. I've also got another skill, and it's to very quickly pack and put things in different places, but be really organized about it because a lot of stuff is moving around.
I'm blown away. There's so many new skills, and you can think of all the tricks you can play on them as well now that you have full access to control their house.
I could turn off the lights when in the toilet.
Yeah.
I could, it could get really naughty. Of course, this is all everyone talks about AI, right? But the number of times, if I got a pound every single time I said, Siri, turn on hallway lights, and it turns on some of the light. And then what actually happens is my house looks like some sort of, Japanese horror movie because all the lights are turning on the wrong places.
Yeah.
How was your day yesterday? You at a conference?
That's it. A quick segue. I was at a conference, I was at a conference called Product Con, and they had leaders from various different businesses talking about problems they'd solved. Oh. For example, like the guy that set up Uber India did a talk, and obviously every time Uber set up a different city, they have entirely different problems that they need to solve.
Yeah.
And the whole Uber mission was that you could get a ride at the click of a button and walk away without paying. Right, that was the key to Uber. Walk away without paying. Your phone just does it. You don't have to think about it.
Yeah.
But in India, people didn't want to pay on their phone, right? They wanted cash. So they had this internal conflict of the guy setting up India saying, we're going to have to pay by cash. And the leader of the company being like, this is the stupidest idea I've ever heard. It defeats the whole point. So really interesting to hear from them. Another guy from Deliveroo, he was talking about how how do they assess what is a large basket, right? Because if you order too much from Deliveroo, they need to send out 2 drivers. But how do you decide what's a large basket? So they had issues where someone would order some sushi, and because it's a large value item, it would push it over the threshold, and they'd send 2 bikes or a car to deliver a tiny bit of sushi. Problems like this. So they had to look at how can we intelligently decide it's a big basket from a consumer when one vegan burger is a different size to a different vegan burger at a different restaurant.
That's fascinating.
It was fascinating.
I have been in traveling in those parts, and they really love their cash.
Yeah.
So how they got round that?
Well, the difficulty was, at the moment, when you get out of an Uber, it takes a little while for it to calculate how much money it's going to be, and it charges you later, doesn't it? Or at least it used to. Whereas they had to calculate the cost on the fly immediately because you had to pay the driver. So there were a few little difficulties they came across. But then they showed kind of a nice picture at the end of their like head of engineering with the very first Uber India cab driver, and there with his crisp note. So there were lots of problems to overcome, a lot of internal politics, and then, yeah, kind of locally, you know, solutions that suit the locale was critical to their expansion, because in every different city, different payments didn't work. For example, they'd do a payment check, and something like 20% of the time, there wouldn't be enough money in the account. So that ride would fail. But the last thing they want is rides failing. They were like, let's lose money. Let's make the user experience as seamless as possible as an absolute priority. And that's perhaps why they did so well.
And the locality is key, right, in these markets. I mean, Uber, I think, is, to me, if you wanted a pair trade, we talk a lot about pair trades here. I'm bullish Uber in the longer term, just because they are so ahead of the game in terms of their product offering, especially if you go to places like LA and San Francisco. But then I would pair it with something like Lyft, which is their closest competitor. And I just think they are just not competitive enough and not offering enough products to kind of cater to the changing marketplace, especially in the older segment. However, I wouldn't make this trade if, for example, Lyft and Uber were solely in a place like Southeast Asia. Right? Uber was keen, absolutely keen. Do you remember this, when they had to kind of wave the white flag and say, "Really sorry, we're gonna ride out into the horizon in places like Malaysia and Singapore," because that market, they didn't observe the locality well enough, and they were late to the game. And what that market really loves is people like being served and being made special. So Grab killed off any competition, and it was like you get into a cab and they go, "Well, Tom's ridden us before, and each time he's made us stop at a Costa. Well, we're going to anticipate that, and we're going to tell you on your app, would you like us to pick up a Costa coffee for you? And by the way, we notice your grandma also travels with you to these conferences. So would you like a grab and go premium so that someone can come out who can escort your grandma, and there's like a special car seat for your grandmother who's maybe in mobility. Oh, and your wife seems to like, I don't know, I'm going to pick something out from the air. Groceries from Fortnum & Mason." So
She's not that posh.
She's very posh. I've met her. She looks very hot. I hope you're watching this. And before you know it, there's a basket in your Grab car with Fortnum & Mason groceries.
Is Grab publicly traded?
I do not work for Grab, caveat. I do not own Grab
yeah.
shares. I'm just letting you know that they are very, very competitive. Right, we've got 5 minutes. Let's go through some of the handy tools.
Okay, next thing was, so I was reading, if we bring up my screen, I was reading this article from Reuters about movement of money away from US stocks towards European stocks. And they have a couple of...
The rotation.
The rotation, exactly. They have a couple of interesting charts here. So this one is showing... This yellow line is DAX.
Can you zoom in, do a Control Plus on that?
Well, the gallery can do that, can't they? That's what they're here for.
Oh, woo! I don't know, it's a boo.
If they could do less booing and more zooming, that'd be great.
Less boo, more zoom, people.
And this is showing, right? This is showing DAX is the yellow line, and then it's showing No, it's not. So S&P is the yellow line, and DAX is this red line. And it's showing that if you look at the 12-month forward price to earnings ratio, it's trading at a 38% discount. That's what that first one shows. Oh, they've managed to figure out Zoom. Thank you, guys. That's what that first one shows there. And that chart's since
the amount of
2005.
ripping on both sides, I'm telling you guys. My ear is bleeding. My ear is bleeding.
We're going to have to go on a team building exercise, aren't we, to get
Team building, yeah. We need trust here. Like, you know, the one where you fall down and your team members have to catch you.
Yeah.
But they don't here.
Well, I can imagine exactly what would happen.
Right, okay.
And this second one here is showing, this is just the start of the year. So this is just since January. And what we can see here is European indices, such as Germany's DAX, France's CAC, against the S&P, and the difference in their performance. So I just wanted to show, given what's going on, given this kind of, as you called it, rotation towards European investments, I just wanted to show a couple of ways that you can find and highlight and identify European stocks. We're going to look at the web and we're going to look at apps. If we look at web first, if we bring this up, so if you're looking at shares, one nice and easy way is you have this countries filter at the top. And if your geography is good, like I'm sure yours is, you can identify European countries. You can turn them on one by one, and then that will show you your European stocks. That's one way. That's if you just go into shares in the normal way that you would. Another way is in our stock screener. Our stock screener shows you a number of different things. We've covered this a few times, but if you wanted to see the information associated with each of the stocks and you just wanted to look at European, you can do so here. So we're going away from US, so let's take off US, and we're moving towards Germany, Spain, Italy, France. And here we have our stock screener just for European stocks. And then obviously you're still able to choose the data that you want, right? So whether you want to look at their P ratio, whatever it is you're interested in, you have that ability there. So that's a couple of ways on the web trading platform. Another way, we're going to do a bit of a switch here. I'm going to switch over to my phone. So I'm going to take that one off. I'm going to put this one in.
It's all very high tech here.
Seamless.
It's seamless.
An absolutely seamless transition. And
What
we're
you
straight
don't
up. Look at that.
see are the 50,000 cables under Tom and my feet.
No, don't tell them that. It's all wireless. So this is the IG app. You remember we have two now, but this one is the SpreadBet and CFD app, our original app. So what you can do in here is, if we go to markets along the bottom, it'll bring up each of our asset classes. What we can do is we can take a look at shares. Now, this is showing global shares at the moment, but bottom left, can you see how we have filter there? So if we go to filter,
It's not a very easy place to find us. Can you just show our trader friends again? Bottom
you
left.
can be very critical sometimes. But yeah, filter, you're right. It is bottom left. You can see filter there. At the moment, it's being sorted by most popular, but you can see we haven't got a filter on. But if we go to filter, our options are we can filter it by indices, but also by countries. So we just showed in the web app, we filtered by country, didn't we? But you could do it by indices. So for example, you could pick Euro Stoxx 200 here, which is wider Europe, apply that. And now we're looking at the top shares across the Euro Stoxx 200 index.
We're being told that we've got another, how many minutes, people? 10 seconds. Can we get through ATR and trading stops in 10 seconds? Or we...
Definitely not.
Okay. We will have to save that for Tuesday. But that's all really handy stuff, because the stock screener, for example, like Andrew McKilvey's really keen on Sarabi and miners. You can use your stock screener to screen for basic materials, for example, which I've got up on my screen there. But also it allows you to go through Smart Score, whether or not you want something with good media buzz at the moment, or you can even find the ex-dividend dates and hedge fund signals, right? And so this is all really interesting stuff. Thank you so much for coming on. We're going to do the ATR and trading stops. And another one of our trader friends wants us to talk about pairs. So that sets us up for Tuesday and Thursday next week.
Sounds good.
Right. We'll be right back.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
You can find a variety of asset classes on the sidebar menu to the left of your platform. It's now time to pick an asset class. There are 4 major types. 1. Shares in individual companies listed on global stock exchanges. 2. Indices, a group of shares measuring the performance of a particular region, exchange, or sector. 3. Forex, the value of one currency compared to another, like the pound versus the dollar. 4. Commodities, like gold, oil, natural gas, or wheat. Decide which of these markets interest you and which you know the most about. It's up to you to research the market you'd like to trade. This will help inform any trading decisions you make. You need to know the risk of trading a particular market. For example, some markets react to events like economic releases. Next, look at the market's opening hours and how they'll fit into your trading plan. The deal ticket will let you know if a market is open or closed. Lastly, look at the costs and charges applicable. Once you're happy with your market choice, place a deal through the deal ticket.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Hey, 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 trader friends, welcome back. And we are here with Will McCreary. Thank you so much for joining us for the opening bell. We're 2 minutes away. How have you been?
Yeah, no, really good, really good. Good to have you back.
Yeah, it's good to be back and so much happening. I'm glad to see that despite Rich's best efforts, markets still seem to be holding up.
Yeah, they do. They've some good results coming out. From sort of some companies, but also great to see. As I say, I saw Rich celebrate Palantir's loss, and I also am a big fan of seeing them fall. So
that's because you sold
exactly.
way too early.
100%. Yeah.
What did you sell again?
I sold it 40. No, I sold it 60. I think I bought it.
Yeah,
at 40,
I think you bought it at 40. Then you sold at 60.
Yeah. So just brutal. But I did speak to a colleague of mine who sat next to me, and he, I think, bought it at 20 and sold it for not very much as well. So slightly made me feel a little bit better. But anyway, hopefully it continues to.
Well, you know, there is time. Just showing Palantir, we just got 40 seconds to go, but just showing you the yellow lines there because we had, I think, Harry Nair or someone asking earlier on. There is a bell right here. I'm getting ready, but looking at that, you can see if I go down to my minute chart there, we're waiting for this. If you wanted to have a real cross below that line, and then it will head towards that perforated line. And we are now all sessions open. Oh gosh, I have missed it here. They've got these great new buzzers as well.
I know, I've been hearing it. I've heard Axel quite a few times.
Have they got any other voices?
Huh?
Have they got any other voices than Axel? Yeah.
Very trigger happy.
You sure? You sure you haven't had my voice? Oh dear. They say it's coming. Yours will be too.
Oh,
so be careful what you say.
I hate the sound of my own voice. I refuse to watch any of these back because I hate it.
Right. Okay, here we are. This is the all sessions and we are off. Let's Will take us through the winners list.
Yeah, nice one. So at the very top is Clean Spark. We're up 1.31%, and then BioNTech up 2% basically, and MicroStrategy 1.89%. That had a bit of a downfall yesterday. Obviously, with Bitcoin struggling to getting momentum right now. QuantumScape up 1.73%. Virgin Galactic Holdings up 0.23%, and IonQ up 1.64%.
Cool,
so maybe the quantum, with IonQ making some headwinds, quantum stocks might actually, hopefully, because I deeply on that Rigetti hype and have seen it. I only put a small amount down, but Rigetti absolutely crashed. Something down 28%. So.
Those are ones that intraday don't sit on it. Do not sit on it.
I know. But the thing is, I bought it in my ISA, and you have to, and if you're an IG, you have to hold it for 30 days.
Yeah.
So
you can't move.
Absolute idiot. I know.
Now if you use your ISA, just make sure they're like solid ones that you can just sit on for a while, because you know you can't move there. Here's the losers list. Quite a few interesting names. Palantir, one of them as well. Will, take us through the others.
Yeah, so Kavana down 9.84%. Peloton 2.6%. GoPro 1.9%. Intel continuing its sort of downfall of 2% after some really strong sort of news over the last week, and Supermicro also been doing really well, just fading off at 2.3%. Airbnb also at 1%.
Yeah,
down.
Intel's a really interesting one. Those of you that trade Intel, just be aware that there are several things happening here. The Intel, I'm sure you've heard of it. They are thought to be struggling to lead in this whole takeover tantrum, and we're still waiting to see what happens. But Intel was pipped, or rather, what they were expected to either be approached or be the approachee, because rivals Taiwan Semiconductor Manufacturing and Broadcom are looking at deals that would break the US chip making icon into two.
Yeah, exactly.
I mean, Intel's such a big name, like I can't.
It's huge, isn't it? And it's so cheap as well, isn't it?
It is
so cheap.
Yeah.
I was speaking to again a colleague who's speaking to Axel, and Axel thinks if you can get under 30, it's a pretty good buy. So.
Yeah. Airbnb also down 1.3%.
Yeah.
Wow. NEO, taking just a look at that, because we've had that news from Nikola as well. Going kaput, basically. NEO down 1.5%. That one unlikely to go kaput because it's underwritten by the Chinese, but still, it just highlights the pain and the change that's currently being taking place in the EV market at the moment. Like, I recently spoke to Mercedes, and they were giving me helpful hints as to, like, if you want to change up to a big car, but you want to spend a huge amount of money, well, they're writing off. They've stopped producing the Q3C.
Oh, really?
Yeah, they still make the Q3B and the Q3A, but the whole strategic issues there, plus the fact that Mercedes, according to, if you speak to any dealer worth their salt, they'll tell you that they knew that the battery was sort of not what it said on the tin for the Q3C. So, for example, if it said 250 reach, it was actually 200 on full charge or whatever. But it does mean that if you don't make those super long journeys and you're looking for a deal, then Q3C might be the one, because they've stopped manufacturing, but there's still plenty out there, right, on the second-hand market.
Sure. I also saw on the EV thing, I think Rivian are down there 0.8%. I think, I'm just trying to remember what they had. They had some earnings, I think, out, or let's have a little look. Or maybe I completely got that wrong.
I think you're right. Rivian did have numbers recently.
That I think weren't as good as forecasted, or you can see in the.
Thanks very much. Away from the numbers, chiming in, saying MicroStrategy's latest announcement of a $2 billion convertible note offering. Thank you so much for that. Yep, that is actually one that we're watching. It's all sessions ticking up almost 2% there. This is the 1 minute chart. hang on. There we are, to show you the move there. What's also interesting is taking a look at gold, because that is hopefully still very close to all-time highs.
Yeah.
Still waiting for that punch through there. And we'll have more on gold, and specifically Sarabi gold, after this break. I love the drum beat that comes into the song. I'm lobbying, Twitter friends. Please, if you feel the same way that I do, I'm lobbying for, remember Saturday Night Live when they had a band on the side?
Yeah, of course. Yeah, that would be
You know,
an upgrade for sure.
we have space, If we get rid of all the cables, got space. So back to gold. Look at, spot gold. It is shining. Ronnie, of course, here kind of looking at this with great trepidation because of his bet with Richie Rich.
Really?
Yeah, but we are still seeing, gold, well supported at that 2,950 level. Now, having a look at Sarabi as well, because we had Andrew McKilvey asking about Sarabi gold. Here we are. This is the daily chart here for you, and you are correct. I concur that this looks like look at that. I mean, it's a great uptrend, isn't it?
Yeah. Yeah, it's I've heard of Sarabi gold. I heard about them sort of a year and a half ago. Someone told me to look at it, and I didn't. And obviously, that was a great run, and completely missed out on that one.
Yeah, Andrew, if you're concerned that it's been too good for too long, then maybe leg some out or take half out and then put it into something else. But I think this one, I'm worried about even saying the word Axel, because they might hit that button again.
Where's the stop?
It was more like the trend is your friend.
The trend is your friend.
Very helpful. Trend is your friend here, indeed, and it's still heading higher. I'm going to look at the latest, one of the latest messages that I recently had from Charles Dingwall, who is in charge of Sarabi Gold CEO Mike Hodgson's schedule. We quite often have Mike on the show here in the past. And, Sarabi is this UK-based gold producer and has operations in the Tapajós region of Brazil. Please tell me if my Brazilian pronunciation isn't exact, but I think that's how you say it. It's got an O with a little apostrophe on the top. And they operate the Palito mining complex and the Coringa project there. And they have seen steady year-on-year increase in gold production. And in a time when gold prices, ta-da, are looking this high, it's hard to see why Sarabi is going to suddenly turn lower. We have questions now coming hard and fast on the chat. Will, lots of questions around, was it IAG Gallery? BAE, here we are, BAE, here we are, BAE Systems. Down 1.4%. I guess the question here is there are two schools of thought. Well, one is that, with everything going on and Putin and Trump still talking, we still have a lot of people, or the world rather, tend to forget still 2 wars ongoing.
Yeah.
Why is it BAE Systems is still not skyrocketing? It has really made a rise from that December, end of December period.
Yeah.
But now it's turning lower now towards that 1312 level. What's your take on BAE Systems?
Well, yeah, I'm not too sure either. I think Rolls-Royce is also down today as well. So I'm not too sure about the sort of UK sort of defence related. Is it down? Yeah, it is down. Related stocks, especially as the rest of the European defence stocks are absolutely flying right now. I mean, what do they think about the sort of Trump? I see Trump is now sort of swaying with Russia a little bit, which is sort of confusing everyone. So yeah, I mean, I'm not too sure why the British ones are sort of struggling.
I mean, to be fair, my view is BAE Systems, if you want to trade it range bound, pay special attention to breakouts. And also, if you're going to trade this, make sure you trade the larger ones, not so much the volatile smaller ones, right?
Okay, yeah.
BAE Systems has its finger in every pie. It's got everything from, land, assault vehicles to weaponry systems to drones. And this is a really good solid one to have. I have it in my pension because, I know Rich continues talking about how Trump is trying to essentially create a situation where lots of European providers have to buy US weaponry.
Yeah.
But that is not to say that we don't see hostilities going forward. All it takes, as we've seen historically, is like one event, right?
Yeah, exactly.
And so that's why I'm taking a view on a very large player.
For sure.
On this, and not so much the smaller ones.
No, exactly. And I was saying to Luke on Tuesday, I read that even if, for instance, the Ukraine war ends, the amount of sort of military sort of or defense sort of assets that the NATO countries have given to Ukraine means that they're sort of 4 years short on where they should be. So they're going to need sort of keep manufacturing all these sort of defense assets for the next 4 years.
Yeah. BAE Systems also saying that they can meet defense demand if Europe gives a signal. So this is the other reason RSAC's asking for my views. This is the reason why you stay big, just like in luxury stocks, right? You don't, at this point in time with China being weak, you don't want to go with the smaller ones. You want to go with the big, right? Robust, and that's Hermes. The same thing in defense. You want to stick with the BAE Systems, or if you're doing your view is that it's going to be the US makers, then stay big. So you're Northrop Grumman, right? Rather than going for the smaller ones. And BAE does have the capacity to meet demand. Bigger BS, making a really good point there. Many of the defense contractors yesterday slid on news of Pentagon cuts, 8% cuts of each of the next 5 years. So, this is also the other reason why the smaller outfits might be the ones that lose out on contracts and be hit really hard. Whereas, to juxtapose this against BAE Systems, which has the capacity to meet demand, they said in February that its order book has hit a record, right? And so they also said, the chief executive, Charles Woodburn, said they have exceptional visibility of the record order backlog and see sustainable value compounding in its business model. So those are kind of really good things in a time when we still have 2 wars ongoing. And, we might not know where we sit, this time next year. So RSX, I am in that boat too. So RSX, I'm saying BAE, and I do have them. So that is in my own pension. So just taking a look at some of the others. Lloyds, you like Lloyds? Good divvy stock.
Yeah, no, exactly. I mean, I think sort of European banks in general are really sort of having a great run.
I'm quite sad because I don't have this in my diversification. I've got Barclays.
Okay, nice. Yeah.
And I've got HSBC.
Yeah.
I don't have Lloyds.
No. Well, I mean, I've owned it and I dumped it sort of mid last year. But I mean, it's had a great run, and I think they're offering another sort of buyback, which again, all these sort of banks seem to be doing right now, and obviously that's really helping their sort of share price at the moment.
And also the thing with Lloyds, I mean, if you take a look at the chart, it is really, look at the weekly and monthly, you can see that it's come back to levels unseen since 2019.
No, exactly. It's pretty.
Managed to punch through that level, and potentially now getting up to, you could see further momentum up to levels not seen since April 2019.
Yeah, it's great to see. Obviously, it's a big sort of UK heavy sort of bank, and very bullish on that.
Yeah. Bigger BA is also saying this could be a boost for European defense groups like BAE and Thales. I do like Thales as well. If any of our trader friends want to get a closer look at what they're investing in, I highly recommend. I think I've already told Andrew Duck and Andrew McKilvey about the DSEI conference, which hopefully takes place at the Excel. I shall be there. And this time round, it is the 9th to the 12th of September 2025. DSEI stands for Defense Security, but actually, you can use it under the name. Every single defense contractor will be there. It is really, really huge. Everything from tanks to the Typhoon.
Wow.
You can get into the Raphael and test out their systems, the Thales systems as well. BAE has a huge, you can see how many people are there, for example. Huge stand, and also HMS Iron Fist tends to be docked outside as well, if you want to have a look.
Amazing.
Interestingly enough, you know that saying, sounds hot on the phone, add 3 stone. Have you heard that?
No.
And as PCM, this might be one you want to tell the others. So
Yeah,
when you pick up the phone and someone sounds hot on the phone,
Yeah.
add 3 stone. Have you heard that one?
No, I don't know what it means.
However, I can tell you that this rule does not apply to when you speak to someone in the Navy or military or whatever, because like they sound on the phone and they're super fit and
But I got
tend to be like really slim.
Oh, really?
Yeah, Leonardo, bigger BS Leonardo is there too, and of course Airbus and Rheinmetall. Rheinmetall, interestingly enough, in many European fund managers' portfolios, but they don't tell you until you ask.
Oh, really?
Because you don't want to stand up at a dinner party and say, yes, I've got Rheinmetall.
Sure.
Interestingly, Rich was saying in the back there, his girlfriend does. And it's interesting to also head out to these fairs, because you then realize on a very highly contextual level how AI is being used in those sort of places. Palantir, for example, are the eyes of defense, and they can also simulate, for example, if you ask for 5 likely scenarios of attack, and these are the likely ways of simulating a counterattack.
Really?
Yeah. So this place is huge. Takes a lot of there's a lot of security there. So if you're going, make sure you apply early, and the application's already open right now.
Phenomenal.
Right. You also like Anglo?
Yeah. No, I do like Anglo. Yeah, I mean, obviously their sort of results weren't as good as last year's, but they are looking to sort of pair with a new mining plan with Codelco. So I think what's their stock looking at right now?
I mean, it's been on this like slow upward channel, hasn't it? From around September 2024. And Anglo, just taking a look at the fundamentals as well, this is a stock that many of our clients trade because it's a solid basic material stock. Also, dividend yield for a miner, 2.7%, not bad at all.
Yeah.
And huge market cap, obviously tons of liquidity there.
I think they just, on the dividend, they've actually just reduced it, haven't they?
Yeah.
By 50%.
Yeah.
Which is really interesting.
This is the other thing with Anglo as well. It's thing to watch out for is its write-downs. It's taken an impairment of almost 4 billion recently due to its struggling diamond unit.
Yeah.
Also restructuring. Don't forget, it's also trying to make itself a major copper contender, but in a time when the world's biggest consumer of copper, China, remains very weak.
Exactly. Yeah. Exactly. Yeah, and you can see that in their results. They've been struggling on the copper front, haven't they?
Right. We unfortunately have just 30 seconds left. How is your day looking like for the rest of today?
Yeah, just on the phones. I've been upgraded.
Remember the hint?
Yeah, no, I will remember that for sure.
Hot on the phone, add 3 stone.
I will definitely remember that. But yeah, on the phones today.
Any more exams?
No, I'm done with exams.
Oh, yeah.
So I'm on the phones.
We need
finally.
we need to go get the champagne out and, you know, celebrate that.
Yeah, exactly.
Congratulations.
Yeah, thanks very much. Yeah, get the head out of the book and
Yeah.
actually doing to what I
know how it
enjoy doing.
feels because my next exam is April.
Oh, really?
Yeah.
What exam's that?
Level 2, technical analysis.
Yeah, fantastic. Good
Yeah,
luck.
yeah. So I'm busy mugging up now. Any of you trader friends have any helpful hints, please slam them here or email me on ask@ig.com. Bigger beers, S&P and Dassault system would be competitors to Palantir. Well, that's right, especially Dassault, which has amazing simulators. Right, we'll catch you right after this. Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer 2 ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Fundamental analysis is a method of evaluating assets to assess what their prices should be. It's based on the principle that every asset has a real fair value, which may be very different to its current price. It assumes that markets will naturally correct to reflect these fair values over time. The aim is to discover assets that are currently underpriced or overpriced, then place trades to profit from the expected correction if it materializes. Now, unlike a technical analysis that focuses on price charts, a detailed fundamental analysis would look at everything that could drive future price movements. The technique is most commonly used to scrutinize the price of shares, where annual reports, industry trends, and a company's management team may form part of an overall assessment. However, fundamental analysis can be used to review the price of an asset. A commodity like oil, for example, could be evaluated on the basis of economic data, regulation, brand recognition, geopolitical factors, and technical specification, among other factors. But while fundamental analysis is often said to be more comprehensive than technical analysis, it may not give you the full picture. For one thing, it's generally only useful for identifying long-term trends, whereas a technical analysis can help find short-term opportunities. For this reason, it's often a good idea to combine elements of both types to get the most accurate view of a market's direction. To learn more about fundamental analysis, join IG Academy today. It's completely free and gives you access to dozens of trading topics.
Welcome back to our beginner series of market measures. That's right, we are taking you right back to the start. Okay, so beginner's guide to options. We've looked at call options. We've looked at put options. We've looked at the whole spectrum of putting them together. And yes, I am going to put this into slides for you, our Successor. And we are going to put this together on our new YouTube that is coming in a couple of weeks' time as a whole playlist. So you can go from start to lesson 30. Sahil has made 30 of these for us to make you an option expert. Now, today we're looking at one of your favorite words, moneyness. That's right, so beginner options trading. Lesson number 4, we're looking at moneyness. Now, in the options universe, the term moneyness refers to the relationship between the current price of the underlying, right, the stock price, where it's trading, and the strike price of the option that you are trading. So as a reminder, the strike price is the price at which the option holder can buy for a call option or sell for a put option, the underlying asset at some point in the future. Moneyness is typically categorized in 3 different ways: in the money, at the money, or out of the money. Right? Now that's based on the intrinsic and extrinsic value, which we did in lesson number 3. So if you're wondering what's intrinsic, what's extrinsic, then go back to lesson number 3. That was 2 days ago. So Tuesday, February the 19th, and that's a real good guide. We went through everything on intrinsic and extrinsic value, and we did that with the head of vol options here. Now, if it's in the money, you have intrinsic value. If it's at the money, it's almost there, right? It's almost there. You're on the precipice of having intrinsic value. If it's out of the money, then you don't have any intrinsic, you've only got extrinsic value, right? Easy to remember. Out of the money, no intrinsic. Now, on put options, if it's in the money, the stock price is below the strike price. Okay, so if you're in the money, the stock price, your underlying, has gone below your strike price. For example, a long put with a $60 strike is in the money if the stock trades at $50, right? If it trades at $59.50, it is in the money because it allows you to sell at 60, right? So you've got that profit. Now, with any option premium above $10 being extrinsic value, right? Just to get that across. So if your strike price is at 60 and the underlying is trading at 50, that is $10 in the money. The option value, if it's anything more than 10, which it will be because there'll be a little time value in there, etc. If it's anything more than 10, that extra bit is extrinsic value. Now, a short put with a $40 strike is out of the money when the stock's at 50, right? So you're short the puts at $40. That reminder, that is you are prepared to buy the stock at 40. That's out of the money if the stock is at $50, as there's no intrinsic value in it. The premium is entirely extrinsic. If the stock stays above 40 at expiration, you collect all that premium, right? You're receiving premium. So that's different. That's if you're shorting puts, if you're selling options to collect premium. Now, for a call option, it's the reverse. If it's in the money, the stock price is above the strike price, right? So the underlying price is above your strike price. For instance, a long call with a $35 strike is in the money if the stock trades at $50, right? You've done really well. It's way above that strike price, allowing a purchase at $35. So if it's a $35 strike, you have the right, but not the obligation, to buy it at $35. Any option above $15, of course, any option value above $15 is extrinsic because you're $15 in the money. Now, a short call with a $60 strike is out of the money if the stock is at 50, right? So you've said, I am prepared to sell the stock at $60 and it's trading at 50. So there's no intrinsic value there. The premium is entirely extrinsic. So that's like me on Palantir at the moment, right? I'm short the $135. So that's all extrinsic value because the stock dropped away to, what, 110 overnight. If the stock remains below $60 at expiration, you collect that premium. That's all yours. Now, the three types of moneyness, in the money, out the money, at the money, the definition of an at the money option is slightly less rigid, right? It's a little bit, when you talk about at the money, it's like, okay, it's like when you're going to be there to meet somebody, right? Yeah, I'll see you at 3 p.m. All right, you might see them at 2:58 or 3:02, but you're still pretty much on time. In general, an at-the-money options are ones where the current market price of the underlying asset is very close to or equal to the strike price. Right? It's close. If it's trading at $299.80, you're at the money, really, on a $300 strike. This means at the money may not have a high intrinsic value, but it may be rich in so-called time value, right? The stock price is almost at your level, it's at the money, but the premium, the option value is high because it's got all that time value in it. Generally, long option holders benefit when options go in the money, while short sellers benefit when options stay out of the money, right? When you're selling options, normally you're going to sell them quite far away from the price, quite far away from at the money. So you don't want it to go anywhere near your strike level. That's when you start to sweat. That's when you start to get nervous. That's where I am in Deckers at the moment because I'm short the $150 calls because I believe in Hoka. And I put that on when the stock was 158 and it's now 153 and I'm starting to think, oh, it's getting close. So out of the money options are in black on the Tasty platform. In the money options are in grey and it's got a big ITM beside it. At the money options are the yellow line, right? So there's a yellow line where the at the money currently is, so where the stock price is. Now, why is moneyness important? Well, moneyness is an essential in options trading, shaping how options are used in your strategies. It indicates an option's risk and its reward, guiding decisions based on potential profitability. In the money options offer high premiums and greater profit potential, right? So if you sell an option in the money, you got to be pretty confident. So then you get rewarded for it because it's risky. While selling out of the money options have lower premiums, and if you're buying them, a higher risk of expiring worthless, a lower potential of profit, probability of profit. Understanding moneyness helps align strategies with risk tolerance and investment goals, making it crucial for strategic options use. Now, what are the takeaways? Well, in the money, out the money, at the money puts context around the strike price relative to the stock price. In the money options represent options that can be exercised, right? To exercise the option at expiry, you got to be in the money. Otherwise, it's a complete waste of time. Those options have real intrinsic value at expiration. Out of the money options represent options that would not be exercised. Those options would have no intrinsic value, right? If you've got a right to buy something at 150 and it's trading at 149, you're never going to exercise it on expiry. Being in the money is a good thing for long options, while being out the money is a good thing for being short options. That's a very basic, premise. Of course, there are times when it's not necessarily good being short options if you're still out of the money, if it's come a lot closer to being at the money. At the money options are just the closest options to the stock price, and they generally have the highest amount of extrinsic value due to the uncertainty of whether or not they're going to be in the money or out the money at expiration. So great, that is moneyness. So now we've done call options, put options, intrinsic versus extrinsic, and moneyness. So this continues our look at everything options. But if you want to fast forward, if you want to get all the details right there and then from a professor, sign up today or tomorrow with Dr. Jim. This is on tastybeginner.livebash.com. We're going to put it up in the comments. If you're watching on the app though, tastybeginner.livebash, right? Because it's a live bash.com. And you are looking at signing up that in the next 48 hours. That means that you can watch at 4 p.m. on Saturday, London time. You can watch it live, or you can collect the digital collectible for Dr. Jim. You just have to fill in these details here: first name, last name, email, phone number, and zip code. I don't know if it works with your zip code, i.e. your postcode, but if not, I normally sneak a made-up American one in there. Don't tell Sosnoff that I told you to do that. Good stuff. Right, we got James Gordon coming up. Angeline's going to be back with him for his trading experiences. Let's hope there's no broken keyboards in the studio.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered. Live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
To find a list of all your open trades, click on Positions in the sidebar menu on the left. Here, you'll be able to see key information about each of your trades, including the market name, the size of your position, the opening price, the stop order you chose, and your limit order. You'll also be able to see your profit and loss. Positions are normally sorted in descending order of your latest trades. To change how your positions are listed, you can filter your view by clicking on your preferred factor, like which trades are making you the most money, by selecting profit and loss. You can edit your limit order or stop order by clicking on the figure and entering your desired number. Lastly, you can close your open trades by clicking on the close button next to the relevant trade.
I'm Ben Hemmington, and I head up the sustainability function here at IG Group. IG Group pledges 1% of its annual profits and directs this to community initiatives. This is a pretty significant amount of money. We're talking several million each year. And I used to work in the charity sector, so I have first-hand experience of just how much of an impact this money can actually have if it's used wisely. In particular, we are focusing on empowerment through education. So looking to see how we can empower members of our community that are disadvantaged in different ways by providing access to quality education. It's an area of work that we're really proud of and that we're having a really excellent impact in. On the IG Group website, we have a download centre which has got lots of information about our sustainability function. Here you can find out more about our product governance, about responsible investment. We have documents around our diversity and inclusion, including a D&I statement, KPIs and targets, as well as our progress against these. You can also find a number of documents relating to how we manage our environmental impact. And then also on that download centre, you can find our community impact report that talks all about our Brighter Future Fund and the impact that it's having.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
Hello, hello, trader friends, and welcome to Trading Experiences with myself and James Gordon. This is like becoming a hit Netflix series where you've got seasons and episodes. And
yeah, I need to renegotiate my deal, I think. It's gone on longer than I was expecting.
Oh my goodness, we are now in the episode that I've been waiting for, and that is capital preservation. This isn't the last one, trader friends. There's one more coming up. To Gordy's horror. I hope it's been, jokes aside, I hope it's been very pleasant along the journey.
It's been terrifying and pleasant and educational and yeah, it's been very good for me. I can't say it's been relaxing, but it's been good.
Amazing. So protecting capital, we've talked about this in the previous episode. You know, when you start off, everyone thinks that it's about making that, quick buck. You see all those adverts of a really fit guy jogging, and I made 30,000 whilst on my jog, right?
Yeah,
but that's not the reality, is it? It's about capital preservation in the very beginning.
Totally. I mean, you can't be in the game if you don't have any capital in your account. You're not going to have one trade that wins you the day. You can have one trade that wipes your account out. So it's very early doors. You're running a business here, right? So start off with that business mindset. Control your overheads. So before we even place a trade, the money you're spending on your setup, your PCs, your screens. Some people have light-up keyboards and fancy lighting and all that kind of stuff. If that brings you real joy, which puts you in a good mood for trading, great. Knock yourself out. I use second-hand PCs. Rubbish £100 screens, which are still running 10 years later, super low cost setup.
So that if you break them, it doesn't.
So when I smash into pieces, it's not horrible. But also so that I had more money left over for trading. I didn't want to regret, like 2 years in, thinking, oh, if I only had another $5,000 to fund my account, then I would still be in the game. Oh, but I've gone and wasted it on some fancy PC setup or some lighting setup. So think of it as a business. Everything you're spending is all part of your overhead. Keep that overhead low. Also accept that trading losses are just a genuine overhead of running a business. No business has no costs. Reframe them into that kind of, the cost of my loss is the cost it is to enter the market and have a chance to make some money.
So let's have a look at some of your you've got a handy chart here for our viewer friends. Just take us through them one by one.
Yeah, so obviously the first point there, which I have just sort of alluded to a bit, is this is your business. Every cost is controllable. You just don't want to regret spending money on something shiny, which you didn't really need, and then 2 years later you've got to stop because you've run out of money. Second bullet there is, I guess, getting into the key of all this stuff is stop placement, right? That's how you ultimately protect your account from bad inverted commas trades. Stops go. The chart tells you where to put a stop. It does not. You don't put your stop where your risk tolerance is and things like that. So you find your setup, you put the stop on. This is where the stop should be, and then you see, can you afford the trade? If you can't afford the trade, it's either because you're trading too big, so cut the number of contracts you're trading, or sorry, you can't afford the trade. If that stop is going to be 5% of your account, don't do it. That's absolutely nuts. So read the chart. The chart will show you where the stop should be because there are natural support and resistance points. You use those natural levels as protection. Your stop then goes the other side of them to say, okay, well, if that level's broken, then my thesis is wrong. Fine, then my stop.
Do you put it beyond that level, or do you put it slightly before? Because there are two schools of thought. One is that you put it slightly before because, you know, if there are any algos or hedges, they might hit you.
There's definitely people who, programs that hunt stops, right, for sure. But no, I was very much putting my stop beyond the resistance point or below the support point, because if that level breaks, my whole trading style was looking for levels to break. So I was looking to buy those stops off other people kind of thing. But if it went the other way, it implied to me that the breakout wasn't happening, the market was reversing, therefore that indication that level had broken, my stop was hit, was the time to get out. If you put it in before, you're going to get hit by randomness. You want your stop to be hit because the market has changed fundamentally direction, not because the market is just random a lot of the time, right? Just random noise. But those levels do have a magnetic effect at some point. So if that level breaks, that's when I want my stop to trigger, because and quite a way away from that level, not like 1 pip next to it.
Yeah.
Remember, these levels, when you're drawing levels in your chart, don't think of them as precise numbers. Think of it sort of mentally as a thick felt tip pen. It's kind of a zone where the history has shown there's price action around that level. There's lots of stuff going on at that point.
That's right.
But your stop needs to be outside of that sort of grey area.
Yeah, and we talk about this a lot here when I talk about guardrails and, you know, putting your stops. It should be like a loose belt that allows you to go for that Hyatt Saujana buffet, as opposed to a really tight belt, and you know you suddenly get stopped out immediately before you know it even has time. And we all know that charts don't move in straight lines. They almost move around like some drunken person after a night out, you know, and you don't want to be stopped out if it's still moving in your favor.
Exactly. Yeah, there's a lot of this random noise that and this is what people do. Right? They put their stops too tight. They do get knocked out, and then they think, well, that's a stupid stop. That doesn't work. It always knocks me out of a winning trade. Then they don't put a stop on, and then they get wiped out. But that's because the stop's in the wrong place.
So I know you're a real fan as well of writing stuff down and preparing. Talk us through your trading journal as well and how this helps with your discipline.
Yeah, well, the journal gives you the confidence of what you're doing. Like that, it's raw data cut in all the different ways that says, I know if I trade euro yen, I'm going to get a 61% win rate. Therefore, I know when I put my stop in the right place, when I put my target in the right place, this is what happens. Therefore, I can almost just walk away. The pattern has happened, trade is triggered. Don't even need to look at it, because I know 60% of the time the data says over the last 2 years that's what's happened. And that's the power of a journal. You can't remember this. Well, I mean, I was trading, you know, many trades a day, mostly several trades a day. Sometimes there was nothing happening, so there was nothing. But over years, you get thousands of trades built up in this journal. And that gives you the confidence to stay in the trade. If you're running the whole 1 to 3 risk reward thing, the journal gives you the confidence that it does pay out at 3. So wait till 3. Don't take it off at 2, then it doesn't work. Wait till you hit your 3.
And for those of you that missed the last episode, take a look at that, because that's where we have Gordy's journals. And what I love about it is not only is it in an Excel spreadsheet, but you've got like words written, you know, by the side. It really, in a very granular manner, shows all the stops, the losses, you know, which instrument, how you felt at the
Yeah,
time?
yeah, and the writing down the feelings is almost self-therapy, right? There was obviously a lot of bad language in there, but it was really cathartic when you've done something stupid. Just sort of tell yourself off. It helped me tell myself off, and it was really helpful to put in the reason why, the style of trading I had. So I had breakouts. I had the preemptive breakouts, the ones that kill you, per the post-it note. I had range reversals. I had trading on breaking news, which was scheduled. Trading on breaking news that was just something coming out over Twitter. Donald saying something mad.
Yeah. Or a CNN headline.
Exactly, and then your journal will tell you you're really good at trading unexpected news, or you're really rubbish at it. Don't do it. But you can't remember all that stuff. You've got to write it down, and it's really boring. Like it's a job.
I'm very interested in box breathing. You've got this in your list. What is box breathing?
So this, I find this, I don't understand how it works. So this is breathing. So you breathe in for 4, hold for 4, out for 4, hold for 4. Do that for 2 or 3 minutes, and it's incredibly calming. So when you breathe in, your heart naturally goes a little bit faster. When you breathe out, your heart naturally goes a little bit slower. Just that's physiology. And the box breathing synchronizes with sort of other natural rhythms of the heart and really helps reduce your heart rate. It triggers a parasympathetic, is that the right word, nervous system, and it really calms you down. And so when you're having a bad day, bad moment, just do that for 2 minutes. And I find it uncanny, like it really works. For me, maybe not for everyone, but it really, I do it before I come in here, because this is absolutely terrifying everyone. And it just takes the edge off things. But when I can't sleep, which is lots, I do that, and then suddenly I'm asleep.
Interesting.
Yeah.
I have the stone. You hear me talking about the stone with Issar, and if there's a particularly, tricky trade, I hold that stone because it reminds me that there are smooth sides and there are rough sides. Also, it's very grounding, and so it brings my focus back onto the moment in a calm manner, not like in a crazy, heightened manner. What you call a chimp zone.
Yeah, I mean, whatever works. I need to go and reread that chimp book because he's still there.
So let's talk about your chimp, because here you have your worst trading loss could have been solved when it was small. So let's have a look at the first chart. Here we are.
Yeah. So this happened on Monday. This is actually one of my real trades at lunchtime, because that's the only time I get a chance to look at the markets really these days. So there you go. We've got a blue line, which is the historic sort of level of interest, shall we say. I think if we zoomed out, there's probably something going on. So I was looking for that to break. The question is, where do you put your stop? The first place you can put it, right, is below, it's where the red line is, below the moving averages, below the low earlier in the day. So you've got some protection. If it gets to that price point, it's probably not going to be going higher, right? The trend has changed. So that's where your stop goes. That is 20 odd pips, I think. For a reward, the price, I got out fairly quickly because, again, there's resistance coming up. So that's probably, I can't quite do the math off the top of my head. I can't read it, but it's probably not much more than a 1-to-1 risk reward. But
I was going to say, it doesn't look like the Axel 1 to 3.
Yeah, this is my thing of take lots of small profits quickly. Because I'm trading, I think this is a 5-minute chart.
Yeah, this is a 5-minute. This is the DAX on the 18th of February.
Yeah, so this is, my method was very much lots of small wins, because psychologically that helped me rather than the lots of little losses and then some big wins. Again, your trading journal will tell you what works for you. Put this kind of stuff in your trading journal, put in your risk reward ratios, and then you can filter on the different techniques and see which one works for you. So yeah, that's just a demonstration of where that's the minimum place to put your stop. If you put your stop any higher than that, then it's just in that noise. It's going to get hit by just, remember, this is just a bunch of people buying and selling. They're not even looking at big pension funds. It's just random stuff hitting the market, big orders hitting the market with no real, they're not looking at 5-minute charts. They're looking at 10 years.
Yes.
So any massive order can come in and move the market a little bit and knock you out. So you want to sort of stay out of that
noise.
Shop.
Yeah.
Yeah.
Okay, brilliant. So that was the DAX on the 18th. Bigger beers saying it's a good idea to do with sales prices. We can't always know when the top is. That's right. That's the first one of the first rules I learned it's impossible. You can't call a top in a trade. So the best thing is to have that theory and to hold fast that theory, but it's impossible to actually call a top.
Calling a top is an ego trade.
Yeah, but Bigger BS says we can always learn how a security moves, that's right, the rhythm, and be better prepared to react, not predict. Monkey Man asking, the breathing, Gordy, is that circadian rhythm? I think circadian is when you sleep.
To do sleep and,
sleep
melanin and all that kind of stuff, I think. Look at me pretending to be a doctor. I don't know.
Well, I think you're right. It's when you keep waking
up.
up.
There is two things that affect the heart rate. So there's one when the heart stretches, it has a natural tendency to slow itself down so it doesn't get over pressure. By breathing, that also sort of reinforces that. So there's some good physiology out there, which I can't remember because I read it 8 years ago.
Well, it's the same reason why if you sing, it calms you down because it's just breathing, right?
Yeah.
You're not aware of. Adam Lou saying, good trade there, James. Let's have a look at another trade by Gordy, right? So this is the Dow Industrials on the 19th of February, 1330.
I'm going to have to spin right around to rhyme it. Yeah, so this is a good example of where, for me, it's too expensive to trade. So I want to trade, that dotted line is kind of a rough zone of interest, is a level which I was looking to break. In my brain, it was like, oh, that looks like a good opportunity. There's a bit of downside there, but the natural place for the stop is like 90 pips above. And for me, that is just way too expensive. Remember, I'm doing super short-term stuff here. So although everything else points in the right direction, there is nowhere else to place a stop sensible there. So just because you're saying, well, I can't afford to lose more than 40 pips, tough. Don't put the trade on because the chances of getting hit are much higher because look, there's nothing obvious there to protect you from being hit. The next level of resistance up is right up there, just at 4.5, and then that's a big round number, 44,500. So you probably want your stop above that because they act as magnets. So suddenly that becomes a really expensive trade to get into for what is probably not a very big profit because if you look to the left, there's a level at 44,300. So you've probably only got 100 pips maximum, even less. But your stop is going to be too big there for my account. Now, someone else might have a much bigger account. For me, that's just an example where, for once, I was disciplined and said, no, I'm not going to take that trade because it's too expensive.
You stood back.
I did. It's taken me a long time to learn that. But
is there a minimum, on these intraday trades, is there a minimum risk reward that you would look at, or it really depends on the?
I have to say, like, although I sort of go against a bit of the sort of the classic.
I feel Axel coming out in a rash right now.
Yeah, absolutely, and I mean, I'll get lots of hate for going against the 3-to-1 thing, and I do like 3-to-1 still sits in my head as when I'm initially drawing up a trade, that is still my base. That's my that's what I want to achieve. If I'm then going to break that and go to 1-to-1. Then I need to have some good reasons, right? I need to then have a more conviction in the trade. I need to have my journal that says, no, that trade happens 70% of the time. It's worth the risk because even if a 70% win rate on a 1-to-1 is still a great result. So I do still like that as framing where you're coming from. And one of the things about this kind of framing, I think about this, I don't know why it is, but if you write down your trade beforehand, like pen and paper, good old school, and you write down how much you could lose on that trade, as a number, and you just think about it for a minute, suddenly you've accepted that loss before you've pressed the button. And it's so much easier to manage. Now, I'm sure Izar has some psychological theory that will back up why your brain works like that. But it really works. Accept that loss before you're in the game. And then you know that's, this is all probability, remember? So for me, you can live through the trade and not think, oh, I might lose money here, because you've already accepted you're probably going to lose money.
You have, and also that makes a lot of sense because you've quantified how much you might gain and how much you might lose, and you're at peace with it, and so then it's all about just trusting the thesis and seeing it through. That's why a lot of people say that journaling, in a way works. If you write about your expected outcomes and how it happened and turned out after that. This is a good one of you stepping back when the required stop was too big. And let's have a look at the next one.
So this Like
chimp.
I'm always embarrassed to show charts where it looks like I know what I'm doing and it's all working out beautifully. So this was just, I'm also a real human who really messes it up sometimes. So this was back when I was full-time. And if you look at this chart from sort of halfway across the page, there's just trade after trade after trade, loads of break-evens. This is pure, the chimp is in control. He's clicking in at market. And then naturally he's terrified because he's, what the hell have I done? So he's getting out far too quickly, loads of break-even trades. There are actually some good levels in here to trade, but I haven't taken them.
How many times did you enter and exit?
I mean, the happiest person this day was my broker. That's a lot of commission on that.
That is a lot of commission.
And it's a great example of just trading with fear. There were some of those trades that would have worked, but I was too scared because I'd already dug myself into a hole. I was just reacting and flinching. None of them were planned. That was not a good day, but it's a reality. So I thought it was fair to share that there are good days and bad days.
Yeah, we have to wrap now, but tons of questions coming through, which I will filter to Gordy after this. Just one that stood out because we don't have much time. R6Anna asking, which moving averages do you use? Do you use moving averages?
Yeah, that's one of the very few indicators I use. So a 34 exponential and a 14 simple, and I'm looking at just a gradient of those moving averages to give me a sense of the market momentum.
Lovely. And we'll get the other questions put to him, and I'll message all of you individually. If I don't have your email, please send it to ask@ig.com. But thank you so much for taking us through this entire series about capital preservation.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
CFD trading is the buying and selling of CFDs, or contracts for difference. As a derivative product, CFDs enable you to trade shares, indices, forex, commodities and more, without ever needing to own the underlying asset. When you trade CFDs, you trade the difference in the price of an asset from the point at which the contract is opened to when it's closed. As you don't own the underlying asset, you can trade markets that are falling as well as those that are rising. So, how exactly do you trade CFDs? Each contract has a buy and a sell price. Sell prices are slightly lower than the current market price, and buy prices are slightly higher. The difference between the two is referred to as the spread. If you think the market will rise, you would buy. This is called going long. If you think the market will fall, you would sell, known as going short. The more the market moves in the direction you predict, the larger your profits. If it moves in the opposite direction, the greater your loss. CFDs are traded on leverage, which means that you only need a small deposit, known as a margin, to gain full market exposure. So, if you wanted to open a position equivalent to 500 Apple shares, you might only need to put up 20% of the cost. Your profit or loss is calculated based on the full value of the trade, however, which could mean magnified gains, but also magnified losses. So, when trading CFDs, you should always keep an eye on the potential downside. Take care to manage your risk with stops and limits. Visit IG Academy to learn more.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered, live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG. Hey, Patrick, how are you? Good morning from London. How is it looking in Stockholm?
Hello, it's just great. The weather is perfect.
Brilliant. So good to have you on because you weren't well last week. I hope you've recovered.
I'm back in full strength.
I was just...
The whole family was under weather last week, unfortunately.
Oh my goodness me. I was just talking with a friend the other day, and I thought of you because I was trying to explain, they were asking what was it like working in Sweden, and I said there are words that you have over there that I just cannot find in the English language. One of them is lagom, not too much of this and not too much of that. Is that right? Or did I make that up?
No, that's right. Just a word that I also love. So I think that...
So explain that to our viewers, because we don't have that in the English vocabulary.
Yeah, so, I mean, the word lagom is relative. So, for example, you can use it if you have something that you're going to share. You take lagom, so that will be enough for everyone around the table to have the same size. So if you're 5, you can take more. If you're 10, you can take less. But it also works in all other situations. So it's just being humble and just being, respectful of giving everyone enough. So it could be time or size of the plate, or it could be just anything.
I like that. It's very civilized. And is it because it's like people don't want to stand out too much, or what is it?
I mean, yeah, so we have something else in Sweden that we call jantelag, which is really that you should behave in a manner that you don't really stand out, you don't take too much space. And that's been under some debate recently. It's not really in dispute with lagom, which is something else. But I just think those two are nice traits in Sweden that you just keep your manners, basically.
Nice. I'm not going to attempt to pronounce that second word. You'll have to send that to me. Right. So speaking of standing out, FOMC, lots of inflation expectations being discussed this morning. Of course, we're waiting on more indicators as well. What have you seen so far that you like, and what do you dislike, and how is it looking in the Taminius book for US inflation and Fed rates in the coming months?
Yeah, definitely. So I mean, it's just in line with my book. I've been writing about this a lot for the past month here in Sweden. Expectations for rates cuts has been coming down a lot, and basically for March it's almost 100% that will keep flat. But you can definitely look into and the interest rate being maybe at neutral at the moment, and that could be positive. So expectations are not for any major increase in or rate hikes or cuts this year, which is good and stable for the outlook. I've actually looked into the CPI number going forward, what could happen there. And as you know, housing and shelter is a major part of CPI. And looking into shelter, it's actually inverse correlated to rental vacancy rates, and that's been going up this year. So as you can see on the chart, it's been going up sometimes. So that's some indicator that there might be shelters might be on the way down. Another indicator for inflation or CPI coming down during the year is the true inflation number. Now, I think I hope you can see this, but the true inflation, if have you heard of true inflation before?
This is real feel inflation, yes?
Exactly. So they measure what they call real-time data, and it's projected that trueflation lies somewhat 45 days before actual inflation, actual core CPI. And what you have seen here in February is just trueflation coming down from over 3% down to 2.5%. So that's one indicator that CPI might actually be coming down. Another one is looking at money supply, and the growth in the money supply could actually be said to grow or in effect the growth in CPI. And as you can see here lately, the growth in the money supply is just around where the growth in CPI lies. So I don't think that will be a driver of inflation in near term. Of course, if money supply will just continue to increase, that could actually be a leader for consumer price index. And especially if you look into the parts of M2 supply, it's the part where it's currency in circulation that has been growing. Another indicator is copper. That is said to be a hedge for inflation. And although this chart might be a bit crowded, copper has risen almost 9% since the start of the year. So that's also something to have in consideration, that it could be an indicator for actually higher inflation or higher CPI. I have read in different places how the copper prices might affect, but there's for each % of increase in copper, there might be some 0.1 or 2% increase in CPI. So these are some of the indicators, and they're not really telling me that we will have a big surprise on the upside. Analysts are forecasting inflation rate around 3% throughout the year. So I think that will be stable. And then, I mean, looking into the yield curve, it's kind of flat at the moment, as you can see here. But what I really like to see is a steepening of the longer durations. And this slide here, you can actually see where the policy rate has been, where the Feds lowered the policy rate last year. The short term has been going down, and the longer terms, the blue here is the 10-year, has been actually rising. So I'm hoping for what's called a bear steepener within the bond market, and that's really good for the stock market. If we would have a bear flattening, where the long yields are just flattening, the whole yield curve is flattening, that would just indicate early recession. But a bear steepener would indicate that we're in a phase of or late cycle, but still a phase where stock markets have the potential to grow. The longer term is also an indicator for where markets see growth, and I think looking forward to 26 and beyond, I think growth will be the thing I look into. If you look into, for example, the estimates for earnings per share during 26, it's actually lower and in a decreasing trend line. So I think I want to see longer or higher yields in the longer durations to sort of give us an indicator that the market believes in growth and then higher CPI in the future.
Yeah, because at the moment, Patrick, the whole yield curve has been like out of whack for quite some time, right? Yeah, and I agree. I kind of want to look for a normalization, if you like. Interesting thing about the trueflation, I also am a big fan of the Big Mac index. Have you heard of the Big Mac index?
Yeah, sure.
Yeah.
I don't know the last numbers, bro.
And I just I find that such a useful tool to kind of explain the Big Mac and the CPI and the quick sort of understanding or reflection of how this could show you a country's inflationary pressures. So for those of you that are not aware of this, you can easily just Google this, and what you'll find is the Big Mac Index here has got lots of different charts. You can do one that's like within just the USA, but you can also do international ones, you know, there's a handy chart as well that gives you like 30, 10-year references, so you can compare and contrast. And the whole point of this, and it was created actually tongue-in-cheek, I believe, by someone who was called Pam Woodall. It was meant to be a tongue-in-cheek illustration, which then sort of caught on and shows you sort of inflationary pressures across borders. What I also like about it is that, you know, very easily, I mean, you can explain this to a small child, that, you know, just the price, obviously all converted to US dollars, the price of a Big Mac, how many Big Macs can you buy in another country? It gives you an idea of, you know, purchasing power. This is on the proviso that, you know, wages and whatever's had to go into a Big Mac remains, you know, the same. So it gives you an idea of input prices as well. So I think this one is a really good one to kind of have in your back pocket as you're looking at the Trueflation report as well. So here we are, Patrick. I mean, like, you know, just a few months ago, everyone was talking about when the cut might come. Now, suddenly it looks like, you know, the Fed is very much on the data wait and see stance. We've seen it in the minutes as well. And now potentially a pause. Do you think by the summer we might even be talking about a cut?
I think by the summer we'll be talking about rate cuts again. Definitely if the CPI starts moving downwards. And that could be a good thing for the market if the lower end of the yield curve goes down and we see a steepening in the longer yields. So I think the market might be pricing in a bit too few actually rate cuts this year. We started off the year with some more rate cuts. I think it was like 2 or 3, 4 or something, and now we're down to 1. But I think they're pricing in inflation that is just too steady at around 3%.
Let's take a look at the CME Fed Watch tool, whacking this up for you just so that you can see this for yourself. Just on the left-hand side, you can hit current. But what I like to look at is compare. And as you can see here, May, June, July, we are seeing, you know, potentially this like pause picture. But it gets more interesting the further out you go. Like, you know, October, you know, December, you start seeing, you know, a real kind of change in the mood music there. And you can see that, you know, the probability really starts to kind of flatten out there. And obviously we don't really have, you know, enough data points yet to go further out, but it's going to be a real interesting one to watch, given that, you know, any data point, we're kind of now into that inflation data is more important than jobs data. Don't you think, Patrick?
Yeah, for sure. And especially for the big tech companies, you would like to see inflation expectations, not this year, but for the coming years. You would like to see growth expectation in line with that for the foreseeable future to just have those high multiples on tech companies. Because if the longer yield curve is trading around 4.5%, if it will be trading there or perhaps below, as we are at the moment around 4.5%, I think that could be a sector rotation going forward in the late of this year from the tech stock to value companies, from growth basically to value. And would we see expectations of growth and inflation coming back? I think that could be really good for tech companies, Nasdaq 100. So that's what I'd really look into and see. It's hard to, as you saw that in the CMI data for next year, to really predict. It's more of a flat situation. And that's why these indicators are so important for us to not be surprised by perhaps lower CPI numbers coming in in April. I don't think March will surprise that much.
Yeah, and speaking of the the rotation, there's certainly been more and more written about it. Just whacking this up for you. This is what Tom Wolstenholme and I were talking about earlier on. The scramble for alternatives to Wall Street finally underway there. With the previous years we've had the what I call the Tara trade, right? There is no alternative as liquidity was cheap. We had the post-COVID, stimulus still in place, and all that was leading to money trying to find a home. But now it looks like there is an alternative going on, and lots of this money, as you were saying, perhaps looking to find other safe havens, at least to diversify away whilst the whole Donald Trump 2.0 is shaking out. Speaking of Trump 2.0, what do the Swedes make of Trump's comments so far and his moves?
I mean, Swedes in general, if you look
we know your neighbors, the Danes,
media,
love him.
No, I don't think Swedes love him that much at the moment, at least not in the media, in the press. It's interesting to see that he slams another tariff threat when the market is at just goes to all-time highs. And we'll see about that. But I mean, the tariff threat that just came this week with no certain date and more information coming in April. I mean, it's just some agenda that he's running. I'm not really accounting that into my trading ideas, since it's what we have talked about mostly, like the agenda. Hopefully, we will not see that much of a tariff situation that will inflict on the CPI numbers. But if they do, we have to take that into consideration.
What do you make so far of the cuts? Doge. It tickled me that I read somewhere recently that despite all this talk of budget cuts and Doge, he's already spent more than $10 million of cash. Now he's taking aim at Pentagon spending, saying that they need to have to cut their defense spending by around 8%. I think it's what Away with Numbers was saying earlier. A lot of noise though. Is this likely to also cause a further roll into cyclical rotation, do you think?
At this point in time, I think it's mostly noise. The data will tell us what they actually achieved or not. So I'm not trying too much to pay attention to the noise. As we talked about earlier this year, US are running a big budget deficit, and they are basically providing liquidity to markets, which is really good.
Yeah.
Would they be successful in lowering the deficits? That would mean less liquidity to the market. But we'll see. I mean, as you said, it's a lot of noise at this moment.
Also, some comments coming thick and fast on the comments page to my left here. Please do put any questions towards Patrick. We'll try and get them answered if we may. One question coming from Monkey Man asking, I heard the R word. How likely are we to get a recession in the UK? Do you want me to take that one, or do you want to take that one, Patrick?
I mean, UK is not my strongest market, so I will give that to you.
Well, Monkey Man, the UK certainly feels like it's not, creating enough stimulus, if you like, for the economy to kind of edge away from that R word. I don't know why we're not saying it. Is it because we're not saying that R word in its totality, so we don't actually cause one? I don't know. I'm just going to say R word for now, because I definitely, I've gone through enough recessions for several lifetimes, so not going to talk us into that one. But with the UK, what I think and what normally happens with the UK is we just trundle along. It's going to be painful, just bopping along that bumpy road, and we're kind of like teeter into like that danger zone, but not quite make it in. But on the whole, it still feels largely painful on the ground for some time before there's a breakout either way. At the moment, that is the trajectory, unless the Bank of England pulls a rabbit out the hat and we see some, real meaningful cuts there to stimulate the economy. I just think we're going to be on that painful, bumpy ride. What do you think, Patrick?
Yeah, and I mean, it's also good to separate like what is the real economy and what is the stock market doing. And in some senses, you can say that the US is also in a recession right now. But the market is something else. And you, at this point, you shouldn't really try to correlate those too much. So if the market is just performing and going on, it doesn't mean the real economy is not going into recession. It could basically be. I mean, especially for the US market. And we had some really high unemployment data coming out this week in Sweden as well, even though the market is just roaring forward. And there are two different beasts at the moment, and you have to really try to separate them. So I don't know the exact numbers for UK, but I mean, in some sense, they could be going closer to that R word, as you say.
Yeah, and it definitely does depend on the tariffs as well, because Monkey Man saying and national insurance hit us in April. Yes, that was very painful, as well as for companies. In fact, I have a feeling that many companies, including Sainsbury's over here, Patrick, I don't think you've got Sainsbury's in Sweden, but it's kind of like one of your top 4 grocery supermarkets. Over here, they shut all of their cafes and they shut their, I think, all of their fish counters or something like that. Correct me if I'm wrong, Monkey Man. The crux of the matter was Sainsbury's actually is one of the better performing grocers, and yet they did that, and there was a lot of talk that a lot of companies are having to kind of cut back due to this national insurance hit. Lots of companies, lots of small business owners really hurting from that as well. Jugger putting in the chat over here, I was wondering if this Trump situation is good or bad for the United Kingdom, and if it decides to get closer to the EU or the US. Patrick, any thoughts on that?
The only thought at the moment is that I haven't heard that he speaks specifically about the UK. I mean,
yeah, I guess because he's kind of looking at us over here and like, the island's too small for me even to bother thinking about.
Maybe it's just too good of a friend.
Do they export anything other than financial services?
And if you look into the threat this week about importing taxes on autos, for example, cars, it's not the strong suit of UK. If you look into imports on wood that he talked about, I think yesterday, it's not really what the UK is strong on exporting. So I think in the short term here, what I've heard is that the tariffs are not really aimed for UK. They will of course affect a lot some companies there. I will probably have to hand that over to you to be more specific on the question.
Well, we've got 30 seconds left. So, Monkey Man, obviously you've probably heard Rich and I talk about this tons, about that, that gilt yield temporary spike in January. And the real feel here is if Trump's tariffs hit our European neighbors a lot more and slow down their economies and cause them to have slowdowns, and the US also slows down, then of course it's going to be difficult overall for us in a slow growth, sluggish environment with still relatively high interest rates. And on that note, I hope you have a good Thursday. It's been so great being back. I've missed all of you, missed all you guys, and Patrick, it's been so good having you back. And we will see you bright-eyed and bushy-tailed tomorrow. Thank you. Hey, Patrick, thanks so much. That was great. Are you gonna email me that other Swedish word, right? The one that I can't.
2.5 Italians walk into a bar. It is Wednesday, February 19th, 2025. This is Overtime. I'm your host, Chris Vecchio, in New York. We have Tony Battista joining us for the first time in Chicago. Dylan Radigan in Milan to finish up this hour. Futures market closes at the top. If you're on YouTube, come join us on the website, the platform, tastylive.com. See what we're all about. If you're already on the website and the platform, come over to the YouTube chat. Tell us what you're trading today, what you think of that weird close. Market bumped lower by about 5 or 6 points there, right as the market reaches 4 p.m. Eastern. But that's not really the talk of the town here, guys. The talk of the town is how good Dylan Radigan's skin looks. Dylan, do you think the market
Listen,
feels
I got
as
an
good
Italian
as you look?
skincare company for you. You're looking to make a couple of bucks. I got no conflict of interest. I have no financial interest. I'm just an advocate. So if you're looking for a recommendation, you just hit me on Twitter after the show. I'll point you in the right direction. Okay, Vecchio?
I could use it. I know that. Vecchio's still young enough.
You're gonna get a personal care package, Tony. I got you.
Thank you, brother. Appreciate it.
I will take one too. I see my future in both of you guys.
I'll tell you real quick. It's the rose petal face wash. Oh, so nice. And then it's like a GH. I don't even know. It's some sort of set of letters. It's related to a stem cell. And then it's like the stem cells of a baby Italian goat, I think. And then they put that. And
no animals were harmed in the making of this product.
No, the animals are fine at the end. It's okay.
Most certainly harmed.
Anyway,
for Dylan's youth serum.
Save it for later.
Tony, if you told me that Robinhood brought Dylan on the show to talk about rose petal moisturizer to kill attendance, I wouldn't be shocked at this point in time. But
you think this is some sort of a betrayal of the institution?
But my question is that tee-up is to say, like, markets here are pretty much closing at or near all-time highs. SPY certainly did. Triple Q certainly did. Dylan, what's the reason why we're finally, trudging through the muck here and poking into new all-time highs after several months of just churning sideways?
The end of global conflict as we know it. I mean, it's a changing. People can be as critical as they want to be, but at the end of the day, less war is good for peace, is good for markets. And I think that what you're seeing rhetorically and practically with the normalization of diplomatic relations between the United States and Russia, setting aside whatever other personal or political or diplomatic issues may be, I believe that normalizing relations with Russia is a step away from escalated global conflict, and that a step away from escalated global conflict is net positive for global economic activity, and I think the stock market reflects it.
Tony, do you think?
Wait, I'm going to give you that. I'm going to give you that, Dylan. But you got to go to the other side too. War is good for the market too, because 6 months ago, when we were full on and everybody was still doing their thing, then we're at market highs. It's just a cyclical rotation of things. That's really what it comes down to. I'm sorry, Chris. Go ahead.
But what does that mean? What does that mean? Cyclical rotation of things. I mean, that's a lot.
Well, I mean, here you saw it in Palantir today. That's been a stock that's been going nuts to the upside, and you get one. Hey, we're going to cut back by 8%. Big deal on defense by Trump today, and then you got Palantir sell off 10-15 handle and then rally back a little bit. I mean, you just go from oil-related stocks into consumer stocks now into something else. There's a market everywhere all the time. You could spin it any way you want, but really what is going on in this market, you're right. It likes the slop. It likes the complacency. Nothing's changed. Everybody still has their rights. It's business as usual. Until it's not, and we don't know when that day comes. So until that day comes, you got to play it as business as usual.
Yeah, defense contractors today, there's a few different ETFs that track these kind of things, but SHIELD is one of them, SHLD. I suppose that's a good name for a defense contractor ETF. Down 1.23%. Palantir, you mentioned, Tony, was off by 10.08%, and they've had just a remarkable run. It's one of the few companies that have just exploded higher here in recent weeks. Including a name like HIMS, Tony, I think this stock is really hurting your son because he keeps sending me messages early in the morning about how he needs HIMS and Carvana to go down. This is more of a question about like market mechanics, I suppose. But when you see something that was trading in more of a, kind of a consolidative range or meandering around for a few months like a HIMS or a Palantir, and then it goes exponential like it has over the past few weeks.
Yeah.
How do you approach that when the vol shoots up and you reflexively want to just sell the calls?
Yeah, HIMS is it's acting like a short squeeze to me. I mean, these last 3-4 days, they don't end well, but they're certainly real painful on the way there. And if you have an existing position already that brings you some short delta, even if you started out as delta neutral, you got to buy the guts and sell the wings again, or change it to a call ratio spread if you still want to lean with a little bit of short delta, or change it to a diagonal spread, something that has defined risk to it. You just mentioned HIMS. When you look at that front month vol with 2 days to go, it's around 180 or whatever, and back month vol is under 100. So there are intelligent trades to make in a stock like this that's gone parabolic to one side, but you're probably going to have to do it with some sort of defined risk. You still can have plenty of risk on, but defined risk. The hard part about this stock is if you have an existing trade. If you have an existing trade, one of the hardest things to do is close it and open something else, and I think that's what you have to do.
Yeah, sometimes you're just going to have to take the L.
Very hard thing for me to do. Very hard thing, I think, for anybody to do. New trader or old trader. We like to stick with things. I mean, because you want to be right. It's just human nature.
No, it is. We're all very loss averse. And, the studies on traders show that if we can gain $10 or lose 20, that's basically the break even point, right?
Yep.
But hey, like if I'd rather almost not lose 20 than to make 10. And,
earnings in 5 days in HIMS too, February 24th.
Yeah, February 24th, right around the corner. Carvana has earnings coming up today after the close, so hopefully we'll get that here. I haven't seen those yet.
It's $279. I don't think it's come out yet. Maybe it has. It's down $3 or $4. On a $30-some-odd expected move. I don't think Carvana's come out yet.
No, I don't think it's come out yet either. Dylan, you're our big Superglide fan. The Nasdaq's been holding up here and pushing higher. We're a few weeks removed from DeepSeek Monday and the transition from phase 1 to phase 2, but the semiconductors have roared back. Should we no longer be concerned about the chat CCP threat?
You can never not be concerned. I think it's less about are you concerned and what's going on with the semis. And I like to look at Meta, because I just think that of the AI names, Meta is actually the one that's the best positioned to exploit both the adoption, but also the second generation. Now, the interesting thing is you can see in that Meta chart that as NVIDIA's come back, Meta's come in a touch, whatever. I don't know if that's 2 days worth of action or whatever it is, but it's a reversal from the big post DeepSeek rally. So certainly if you look at the NVIDIA bump and the Meta reversal, it would suggest that anxiety about DeepSeek is, or anxiety that DeepSeek has torpedoed the CapEx value of the first phase of AI is less concerning today than it was a week ago. I also wonder the degree to which the Grok, whatever V3 Grok hype has benefited the sort of OG AI names as evidence of the fact that whatever DeepSeek may be an interesting carnival trick, but at the end of the day, it's the big multi-hundred billion trillion dollar infrastructure play that is dependent on the NVIDIA H100 supercluster that's going to ultimately set the agenda, and that the Grok action is where the action is. I still would rather own Meta than NVIDIA right now if it has an AI play.
So you bring up Grok 3, and I want to revisit that immediately here as one of my points of note for overtime today, because we were discussing this as well recently, and I think there needs to be some correction on my part, if only because the results that were shared the other day seem now perhaps less accurate given independent testers. Artificial Analysis, which is a great follow on X. Analysis at the end is ANLYS. They are the firm that put out the DeepSeek V3 and the DeepSeek R1 testing model results that ultimately helped spark this, wave of confusion and fear back at the end of January. So where do they put Grok 3? These test results were released last night. Their Grok 3 reasoning beta is basically on par with ChatGPT o3, and their Grok 3 non-reasoning model is basically on par with O1 Mini. Why do these things matter? Why do we care about them? Well, it would mean Grok 3 is the best non-reasoning model in the market right now, and it would mean the Grok 3 reasoning model is perhaps the second best one, closer to O3 than DeepSeek R1 is. And it goes to show, I think, the bigger picture story there, Dylan, Tony, is that if you have the money and you can buy the infrastructure, you have the compute to build a successful model very, very quickly. Now, what comes after that, who knows? But Elon Musk just started doing this 18 months ago, and the only way he got there was by building this supercluster with 100,000 GPUs, soon to be 200K. They're planning one that's 5 times bigger. That's fantastic. And Satya Nadella, the CEO of Microsoft, is out here today's session talking about what this means for the world of compute. When you have AI that can go out there and create its own agents, those agents are creating other programs and tasks for other agents to do, new software being written, the turtles all the way down. And you need scale and scale and scale and scale to build for that kind of automated future on a computational basis. So, if tech stocks are, benefiting, broadly speaking, from the AI trade, that's part and parcel to the price action we've seen. It's hard to doubt the narrative right now. I mean, Tony, you're not much of a narrative guy. You look at the prices and what the options market's telling you. Mm-hmm. What do you make of the price action this week, though, given the fact that it's the second half of February with OPEX around the corner?
Sure.
Do you find that the market should be a little bit stuck the way that it has been the past 2 days?
No, I didn't think it would be stuck the way it is. I thought we'd have a lot more back and forth action than we've had. I didn't think volatility would be near its lows. It is expiration week. It doesn't mean too much these days, but you and Tom have both talked about it being kind of a weakish week. But really, that's the last day, Thursday into Friday. So I'm not unhappy with what's going on, but I'm a little I'm glad that Tesla sold off and we're able to buy a little bit of a dip in there. I'm glad that Meta sold off its highs. I can't stand Zuckerberg. I think if Tom can hate Elon, I can hate Zuckerberg. But I wanted to ask you both, because you were just talking about Grok and DeepSeek. Dylan, did you download DeepSeek?
No.
Okay, Chris,
I'm a terrible. I don't download anything. You know what I use? I use Bing.
I remember when I met you. You had like basically an analog phone. You had
I'm a late adopter, Tony. I'm a late adopter. I use Bing. Okay.
Okay, that's fine.
I use that. Just so you understand, my level of AI utilization is Bing, and I do use the Grok a little bit on the Twitter.
Yeah, but I don't think. But I think you're actually a perfect example for what I'm going to get to in a moment, and I'll tell you why. Because you wouldn't download DeepSeek, and Christopher, did you download DeepSeek?
Asterisk through Perplexity, right? You can run a jailbroken that's not the CCP version because it's the model sits in US servers through Perplexity AI. So yes,
it's like
I have
a mirror of DeepSeek. It's a mirrored version.
Okay, yeah, so you went around the back end because you were worried about what was going on in DeepSeek to get DeepSeek. Great example of what I'm going to come up with too. Dylan Radigan, you have Twitter, you have X, correct? I talk to you all the time on X.
It is my predominant social media application as a consumer of information.
And a news source for you too, I would assume?
It is my primary news source.
It has Grok on there.
That's the only location where I use Grok.
The accessibility to it is what's going to make it so popuper. Chris, you're looking at it from the back end about how good it is.
So you're saying distribution is the future of AI, not performance.
150%. And if you can do it from a quote unquote trusted source. I mean, if the man can have your social security number, he certainly can have your AI ability. Sure, why not? That's all you need, and that's what's going to make it good. Whether it's a 67 versus a 70 or a 60 versus a 70, you can get it. It's right there. You can use it. It's easy and it's trusted. End of story. It becomes number one.
That's a really interesting point. I mean, if you think about ChatGPT and then the wrapper that's Microsoft Copilot around it, the two of them cumulatively have about 150 million users per day. According to ChatGPT's deep research model, Twitter, as of last month, had 245 million active users worldwide per day. So, you talk about Grok 3 being able to bootstrap on all the information that's coming through X. That's a big pool of data that it can train on.
Yep, 100%.
Mostly slop. I would argue that the content on X has become sloppier. The bots have died down a little bit in the past few weeks, which, maybe I miss them. But really, yeah, I mean, Grok has a chance to now it's a top model, though, already. It's sitting near the frontier. And is it perfect? No, just like ChatGPT is not perfect, nor is Claude 3.5 Sonnet or DeepSeek. But we see that there's importance here to this compute, and so the DeepSeek gaps in these markets have closed. Dylan, now that they've closed, you were saying something at the end of last call there that the markets are liking what they're seeing in the geopolitical stage. I know there's probably a good deal of people out there saying, we're betraying Ukraine. The market doesn't seem to care about that. The market seems to have a bigger picture in mind right now. What is that big picture?
You're asking me, or is that rhetorical, or is that?
No, I'm asking you.
And the big picture is
what is the big picture?
A global peace between China, Russia, and the United States, which I'm skeptical that it's going to happen. But that is the carrot that's being hung. The optimistic interpretation of this moment in history is that you have the three most powerful nuclear armed nations in the world posturing to reduce the collective nuclear threat. The cynical view, and that's a win for humanity, full stop, sure. And it's certainly for the economy. The cynical view is any version of 100 interpretations of gamesmanship and manipulation and posturing, and because the other version is, the United States is attempting to manipulate Russia to create it. The United States is concerned about the proximity of Russia and China as an alliance relative to the United States, and the real enemy of the United States, or the real adversary of the United States, is China. It's not Russia. And that China is the weak third pawn in a battle between America and China. And so if Russia is the buddy of China because they have the physical geographic incentive, and then also recent shared self-interest, if you will, relative to resources and oil and all that jazz, that it's a strategic move by the United States to bring Russia away from China and in the direction of the United States as a way to weaken China's position. That's the most credible, cynical interpretation of the maneuver, which does not necessarily eliminate the more optimistic view, which is move away from global nuclear holocaust. Now, here's the really cynical version of it, which is if Ukraine had nukes, they wouldn't be in this situation. North Korea would never be in this situation because they do have nukes. And now if you're a country that's not one of the big three, get your nukes out, because if you don't get your nukes out, no one's going to protect you. And Ukraine is a cautionary tale. So now everybody's got to get a nuke. Because
you get a nuke.
Yeah, because Ukraine gave up their nukes in exchange for protection. The protection wasn't there when they needed it, which proves that if you do one of these mamby-pamby deals where you give up your nukes, there ain't nobody, the cavalry's not coming when you need it. So you best get your nukes out when you can. And we're going to be all nuked up as a result. That's the most cynical interpretation.
I asked ChatGPT what kind of companies would benefit from Dylan's thesis of nuclear weapons proliferation, and ChatGPT tells me this is a highly sensitive and controversial topic with significant ethical, legal,
Grok answers anything.
Security implications. They're like, instead of focusing on companies that might benefit from proliferation, it's more constructive to consider the industries that would work towards non-proliferation, and provided me a list of those. So Grok 3 may be the answer for this. But Dylan, you know, always thinking in the trader's perspective, what is the trade there? That is perhaps why for the past 2 days, I've seen some people in the chat saying, what do we do with LMT? Right? Lockheed Martin here. I have a hard time wrapping my head around this. Europe just does not have the capacity right now to field a standing army on its own. It does not have the weapons manufacturers to build up the armament that it needs on its own. And one of Trump's proposals is that the U.S. security umbrella will remain there if you buy American. That may not be how I would conduct policy. Dylan, Tony, maybe you guys would or would not the other way. But the fact matters, this is the world we're living in. And so I can't see how Germany, a deindustrialized Germany, is all of a sudden going to flip the switch and be able to fill the gap if it wants to maintain this front in Eastern Europe. So, Tony, this is like catching a falling knife. It's 102.1 IVR in LMT, but it would be one of the companies that, yeah, the budget cuts are coming, yada, yada, yada. Maybe the worst is over.
How about this? I'm sorry. I've been talking to Grok over here. I got a new idea.
Oh, God, go ahead.
Crypto's a big thing. I heard about it. I don't know if you heard. It's going to be a thing.
It's been around the block.
AI apparently also a thing.
Yeah.
What monster are you
More
creating?
Conservative. How do I describe a political environment that's a little bit less that's evolving in a different way? I'll let everybody decide to have their adjectives. And that a prime beneficiary of the new political environment plus the AI plus the crypto is just nuclear power. It doesn't have to be nuclear weapons. But if there's ever a time to get long nuclear power derivative trades, because there's not the anti-nuke power political factions are less powerful, and electricity demand is, spiraling higher.
Yeah, I think that's kind of been the play even leading into this administration, hasn't it? I mean, that's something that
No. I mean, obviously, yes. It's just that whether the new administrative regime, the whole deregulation vibe, the whole let the dogs run free vibes, easier permitting.
Yeah, I mean, it makes sense if we're not to get political here, but if we're making sense again, if we're making sense again, your argument makes sense. Like Lockheed Martin, markets aren't great in either one of those products. So both of them for me have been something that I haven't traded. I mean, I don't like trading bonds. I don't like trading commodities. So my world is a lot smaller than a lot of people's. I don't like trading currencies that much. I don't like the tick size in there. I don't like the small movement in there. I can't get a feel for the market. So I try to stay away. I try to stay away from those and stay more into the equity place. I mean, getting back to Palantir, I was reading that the CEO wants to sell 1.2 billion shares of stock or notional value of stock. I don't know for sure. I didn't read it well enough, but I mean, that's another reason for the stock to go lower. I read another article where only insiders were selling stock at PLTR, but PLTR hasn't had a downtick in 2 weeks. So is that information even good information, right? I mean, maybe it's good today, but it wasn't good for the last 2 weeks. So for me, you just really got to kind of trade what's there and in front of you. Going with the why of things makes it a lot harder for me. Chris, Ilya, Dylan, you do a much better job of that. I like to listen to what you have to say and then try to come up with something for that. I don't have an original idea. Like, I really don't. Like, the market gives me my ideas. Tom gives me my ideas. You guys give me my ideas, and I go from there, and I make a small assumption.
When you say this is what I've never understood when these big floor traders, these really big deal, big famous floor traders like yourself, and a swagger into the room with your sort of false humility. You're like, what do I know? I don't know. I don't even know. I can't even tell my left shoe, my right shoe. I don't know. What do I know? I just do what's in front of me.
That's true.
I just trade what's there.
That's right. Yes.
So where I come from, upstate New York, they call that bullshit. Okay.
Okay.
See.
Okay.
Just to be clear.
So I like to be clear.
So when you say you trade what's in front of you, or you trade what's there, what's in front of you? What's in front of you going into tomorrow? What's there right now? What do you see that's there?
Sure. Like in SMCI, which was rallying big on Tuesday, I did a call ratio spread in there because it had upside call skew, which means further out of the money calls are extremely expensive relative to out of the money puts. So I bought an $18 wide call spread for free. And SMCI
because the deep out of the money call was so rich, it paid for everything.
Because the far out of the money calls, not deep in the money, far out of the money call, out of the money call.
Yep. So you sold the way out of the money call because it was so rich that it paid for your whole operation.
Pretty much. And and the stock had to make new highs. It's closer to lows than highs. It had to go up to $130. The stock is, $60. It was $55 when I put it on. And by new highs, I mean highs in the last calendar year. I mean, I can't go back into the dawn of time. I mean, I only care about it's a 30-day window for me. That's the type of trade I make. That's the type of thing I would have done at Palantir. But to go back to my argument, I might have made that same trade a week or two ago in Palantir, and I'd be underwater today. Now, maybe after this 10-point move, I'd be back to even, but that's what I would do. I trade what's in front of me.
In terms of looking, but what I'm interested in was when your radar of looking for what's in front of you, you're filtering for distortions or unusual pricing of implied volatility.
I'm looking for what volatility is doing, and then I'm trying to find a strategy that kind of piggybacks what it's doing. So volatility, if you got call skew, I'll give you another example in Tesla. Tesla last week was going straight down. Now, what usually happens to volatility in an equity, not in an ETF, in an equity, when it goes down? Volatility usually goes down with it because it goes down. In equities, volatility usually goes down, like in a Tesla or a Meta or a Netflix. Volatility expands on the way up because all the euphoria and all the, hey, I want to own this stock. People want to buy options. Volatility goes up on the way up in equities, and it goes up on the way down in ETFs like SPY and Qs because everybody's worried about the downside. They say, I have to have downside protection, so they bid up puts. Tesla, just a couple of days ago, you can see by that little spike up there about 3 or 4 days ago when it was making new lows, volatility actually started upticking. So I said to myself, okay, Tesla's gotten killed. It usually only goes higher. Volatility usually goes lower when the stock goes lower. It's now having a little bit of an uptick. I want to do a strategy with long delta in Tesla. So that's what I did on the follow page for all those reasons. It's exactly what I wrote in the description. Just see what, I don't know, but I'm just trading what's in front of me. Those are two examples of trading what's in front of me. Now, somebody could understand or believe they have an assumption why Tesla turned around. Maybe somebody who follows charts, like a Tim Knight, might say, hey, it filled this gap, or this is a triple bottom, or something else like that. And that's how they get to their conclusion. It doesn't matter how you get to your conclusion, as long as you do something that's logical, that you believe in. And if you believe in the noise of, hey, going back to your idea of nuclear power, if you think that that's the reason why I do it, great. Let's look for a product or a stock that hasn't participated in it and look to buy that. Like that's the assumption that I want to go with. That's trading in front of me.
Okay.
Speaking of trading what's in front of you, Jim Cramer tweets out, Palantir will be back. Tony.
Okay, that's the end of Palantir as we know it. You can now, I don't want to get on him. I've actually met him. Dylan, you may not know this. When you were on CNBC, I was actually also ran to do a show in there with Options Action. I was the fourth alternate to your partners there.
They're lost, Tony. They're lost. They're too bad for them, sir.
Thank you.
Too bad for them.
Thank you. I appreciate it. I think they were better. They were more eloquent speakers than I was. So I think they won pretty easily.
Too bad for them.
But Jim's been having a hard run lately when he starts doing these things, when he puts it out there like this. And he really is the type of guy that likes to, buy high and sell higher. You know what I mean? Kind of thing. And when you get a turnaround on a stock like Palantir, it'll be really interesting to see how it behaves in the next 3 or 4 days. If it doesn't immediately bounce back, you could have seen the top in Palantir, at least the velocity to the move in Palantir to the upside. It may go sideways for quite some time, but the upside or that euphoria that we had is over if it doesn't regain its highs.
Yeah, Kramer's a big Eagles fan. He said the Eagles are going to win. The Eagles won. That's kind of thrown my whole, is the Kramer curse broken?
Yeah.
Right? Is he no longer inverse Kramer? What do I do here? So, I don't know what to do with that. But yeah, it is this is kind of like a top piercing moment. And from that technician perspective, just a word of caution. We saw this recently, right? That's an outside engulfing bar right at the high, which means it's a key reversal. That does signal a top. It's really difficult to get bulled up into the new highs here at the 72.8 IVR, right? We may be looking at a bunch of chop here. And it comes on the back of that defense spending news. A new House Appropriations bill is coming around the corner. We have some changes in where the money's going to be flowing, but it looks like $4.5 trillion of new debt. Dylan, is this, I guess, speaks to the Doge initiative. I'm watching and following the trackers. Polymarket actually right now is running a Doge tracker, which a Doge savings tracker, which is fairly useful if you want to cut through the noise of everything going on, right? Forget all the tweets. Right now, $55 billion, according to Polymarket, from the math that they've been doing behind the scenes. $55 billion in savings is not a lot compared to $4.5 trillion of debt. Should we not be worried about the government spending stopping anytime soon? That's supposed to be a deflationary impulse to markets, Mr. Radigan?
Try that again. Try that one more time.
Government spending looks like it's going to continue. Only $55 billion in savings from Doge, according to Polymarket thus far. And they're tracking this behind the scenes, looking through all the data that's being produced, because, of course, there are betting markets around it.
Would you rather not have the $55 billion and just have the spending?
So this is the conversation I keep getting back and forth with Victor, and I think we're talking past each other on this. I, as a trader, only care about this through the lens of, is the government spending more money or less money moving forward? Because if they're spending more money, that tends to boost asset prices. And if they're going to be spending a little bit of less money, that could bring down asset prices.
Fair enough. But would you answer my question?
No. So right now, Doge, it looks like it's not saving a lot of money because it's $55 billion against $4.5 trillion of new debt. So that's the government's going to spend still. This is, I think actually Alex Karp, Palantir said it today. We should we shouldn't want our taxpayer dollars going to waste. Who's for wasting our own money? What is that about? What? No, we should all want an efficient government. But
so I'll give you the problem that they're going to run into. Okay. And it's currencies. And again, I don't understand them that well, and you understand them a lot better than me. So help me here. Maybe I have it wrong. Maybe I have it right. When Trump first did this in his first presidency, you had a dollar that wasn't as strong as it is right now. Like the dollar is extremely strong right now. So you were able to kind of offset a little bit of inflation with such a strong dollar. I don't think you're going to be able to keep the dollar higher the way it is now. And you're going to have the spending, and that's what you're going to get to see a little bit more inflation. Do I have that correct? Does that make sense? I mean, I think that's the canary in the coal mine, that he doesn't have the market in the currencies that he had in the very beginning of his first 4 years for the policies that he might use if they're exactly the same this 4 years.
Right. And back then, the Federal Reserve was already tilting into cutting. And so they're cutting, and then the dollar's weakening. So while he's, raising tariffs, is it really hurting corporate earnings? No, because 61% of S&P 500 revenues come from abroad for the Mag 7 companies. And so a weaker dollar helps them. Right. And so you don't see a stock market that falls down. But at this juncture, right, the dollar is actually very, very strong. Right. And if we're going to have these tariffs, the Fed is not cutting rates this time, which is a huge difference, right? And like the trajectory of which way interest rates are going from the Fed is a big determining factor.
Right.
And if all these other countries are going to see weaker economies because they're now shut off from the U.S. consumer to an extent, that means the dollar probably stays strong.
Right.
You know, I actually don't know how it's going to work out, but that's what the Fed minute said today. But yeah, I mean, Tony, like I don't, as a trader, I have my own political personal beliefs about what should be cut, what shouldn't be cut. Macro level is the government still spending a lot of money. That's the only answer we need. And
the government always spends money. That's what moves the world.
But I think that's the point, right? Like we've been told.
But we've been worrying about the budget for 50 years.
And it never comes home to roost.
Never comes home to roost. So why are we worrying about it now?
Exactly. Anybody who ever talks about the budget is, as to me, is somebody who's not serious.
Yeah, I agree. 100%.
You only talk about the budget when it's politically convenient for you in that moment. And when it's not politically convenient, you don't talk about it because budgets are irrelevant in the United States, utterly and absolutely, which is why there's no reason to reconcile tax revenue with expenditures. The whole thing is a manipulation that is a way to extract taxation from the poorest and the middle class and the upper middle class, even the W-2 class, I'll call them. And in the meantime, create massive tax giveaways to the capital gains class. Regardless, the budget, and the reason the budget doesn't matter is because the dollar is a reserve currency. And so the entire thing is an illusion up until the currency ultimately takes a hit, which is an abstract future moment, which is a derivative of not of our own currency, but of an alternative emerging, which would require geopolitical events that are unimaginable at this time.
Yeah. I mean, I think that's kind of right. Like these things don't really matter for the market is where I'm landing right now. Through the Biden years, when we had these continuing resolutions, it just meant that spending continued along its current track. So the market said, okay, the government's still going to be pumping a lot of money, no problem for us. And that's what it looks like right now. So, as someone who, and we've talked before, Dylan, like, oh, if we have significant spending cuts, then is that something that could help with bonds? Well, if there's less government spending, that's less growth. So that takes the growth premium out of the curve, right? That could be good for bonds. So we got to keep an eye on this story if we want to be directionally long bonds. I just don't see the narrative pulling together the way that would justify having a trade predicated on that possibility of an outcome right now. That bill will apparently get a House vote tomorrow, so we should be keeping an eye on that. I suppose somewhat tangentially here, guys, what's going on with Bitcoin and crypto generally speaking? Tony, this has gone nowhere for weeks. Usually we think about like Bitcoin being the high beta NASDAQ. What do you make of this?
Yeah, nowhere fast. And I think Tom mentioned it, how coin over the last couple of days hasn't really participated in the same realm that Bitcoin has. Like coin's actually been even weaker than Bitcoin has. Bitcoin going nowhere, coin kind of going to the low end of its range. I think last time we were together, I mentioned to you how I thought Bitcoin had seen its shining moment for this short period of time here. The next 3, 6, maybe year. I think all of the ETFs. I think all of the noise from the administration about how good cryptocurrency is going to be and Bitcoin and everything else that they're embracing it. It seems like when they really talk about these things, it does not make new highs or have the boom that like it almost seems like a pump and dump environment to me. And I think Bitcoin's going to get a little bit weaker. So I don't know about coin itself, the stock, but Bitcoin, MSTR, I think they got a little bit of rough sales to go for the next 3 to 6 months at least.
Why do you think that?
Because again, Dylan, I'll trade what's in front of me. Give me the environment for Bitcoin. It's phenomenal. I mean, better these past 3-4 months with this administration than it was the last
And
3 or
it's
4
ever
years
been.
with the last
Best
administration,
of all
right?
time.
I mean,
Best
okay.
of all time.
And that's my news for you. That's my if it's all out already and everybody talks about it every day, it's too old, it's too long in the tooth. I look at it as the play is done. I think the velocity to the upside is done in Bitcoin for the short period of time. I'm not putting a line in the sand and saying this is done. I own some Bitcoin myself. I don't own as much as I have in the past. I've lightened up, but I think it's too much good news. It's just too much good news. The market likes a little bit of a wall of worry. Too much good news here in Bitcoin. Too much good news.
Would you go with MSTR puts or some sort of negative directional trade on MSTR, or you just get out of it?
I don't have a position in MSTR. Thankfully, the markets are way too wide in there. I would have gotten killed over the last year.
Oh, yeah, that's MSTR is a tough thing to trade right now. But outside of MSTR as a Bitcoin name or crypto name, generally speaking, I can't help but notice that these intermediaries, like if you want Bitcoin right now and you don't want to have your own wallet, you could just buy iBit. Why even go into coin? Why even go to get a proxy like Riot, for example? So when crypto's going up, these things are going up too, but not as much. And when we're moving sideways to lower in BTC and ETH, these things are falling a little bit harder. I don't have any positions in coin, Riot, any of MicroStrategy, soon to be just called Strategy. But I don't think these are great vehicles to, quite frankly, trade if I'm looking for Bitcoin exposure. I would just go to the Bitcoin itself. iBit is right there. It's highly liquid. There's Bitcoin futures. There's Tasty Crypto, right? So many options.
Yeah, you're right.
MicroStrategy also, just one last thing, like this Bitcoin yield play that he's doing. Yeah, if the market wants to keep giving him, like letting him short $1 to buy 3 back, like for his shareholders, he has to do that every day of the week. But like, is that if you want the Bitcoin exposure, just trade the crypto itself. Don't mess with Michael Saylor.
I agree with you. I agree with you there, 100%. 100%.
Yeah, there are better ways to skin that cat. So guys, we look at this market here as we go into the final 15 minutes. Mostly a green day, not necessarily in the bigger names in the market, but a lot of solid distribution here across the board. When we take a look at the various sector performance, we like to say we track 25 here on overtime. Not that many were in the red here today. Those that were in the red, 1, 2, 3, 4, 5. We'll call it 10 in the red, 1 unchanged, and that leaves 14 on the board as in the green. Top performer, healthcare, XLV. And XLV. And
another product that's a tough one for me. I mean,
right. And the big name in there is UNH. So I suppose that's the place you could look. They announced potential for layoffs, job cuts. People tend to like when companies spend less money on things. Tony, please don't get any ideas about me or Dylan in upcoming reviews. What do you think about UNH? Obviously, it's been in the news a lot. It still has sustained higher volatility. It feels like a Boeing market from last year with all the negative headlines. But again, how are you seeing this market in front of you, given that it's the largest name in, say, the Dow?
Yeah, I've traded UNH from time to time. It has earnings coming out in April, I think the middle of April. Some of the out-of-the-money calls and puts markets get a little bit wide there. It's a $500 stock, so I'm always kind of looking for a defined risk trade. So if I could sell a little bit, I like to sell UNH put spreads as a small play more than selling call spreads at this juncture. I don't know. To me, UNH is a fringe player at best, but a nice wide put spread. They trade kind of by appointment. You got to go $10, $20 wide. You can get about $3 at around the 20-ish delta. If you look at like March or April options, I would probably stay away from April because of earnings and stay in March with 30 days to go. So for me, I'm a little bit of and not because the stock is up $10 today, because the stock has gone down yesterday and the day before that actually gapped down pretty good. But I would look to sell put spreads on a down move in UNH. I think it's probably seen its worst for the time being.
Yeah, the market's in a bunch of support, and I stand corrected. I didn't recognize Goldman Sachs' recent game. They have now become the largest component of the Dow Jones, which banks are on an absolute fire here. BKX, the KBW Bank Index, is just a stone throws away from a new all-time high. XLF is basically already there right now. I mean, Dylan, is this the era of deregulation? Is that what this is all about? Are banks just
I mean, yes, it's about deregulation, but it's not what it's all about. I think it's all about an era of or a moment, I should say, of optimism for economic activity that is supported by activity in technology, activity in energy, activity. You know, you're getting all the deregulation creates more activity in energy, creates more velocity in technology. It creates more velocity in real estate. It creates more velocity in insurance. And all of those things create, and then you have the deregulation that then supports the actual velocity in finance. And so I think it's too simplistic to say, oh, well, there's more leverage coming into the financial markets. And because there's more leverage coming into the financial markets, the banks are going higher. I think that the banks going higher is a broader sentiment to the overall sense of expedited permitting and a heightened level of economic activity that transcends the banking sector itself. And the KRE has a nice thing to slap up in front of us, because I do think that the real estate markets in general are among the areas of the world that will benefit from a real estate developer president who's advocating for expedited permitting and less bureaucracy.
Yeah, you mentioned that there's permitting getting out of the way. There was something big that happened yesterday. Again, if you're a nerd like me and pay attention to this stuff, the White House decided to take a step back from an administrative ruling related to the CEQ framework for implementing NEPA. NEPA is the framework that everyone loves to hate if you're a developer. It was the regulations first granted by Jimmy Carter in 1977. It is basically the maximum pressure that the administration can achieve in moving forward with permitting reform without going through an act of Congress. So if we think about various projects that have struggled to get off the ground in recent years, if they're data centers, if they're new power facilities, if it's permitting for building out the electrical grid, forget nuclear or natural gas, but actual transmission lines, some of that stuff now can move forward a little bit more quickly, which, again, depending upon where you sit, you may like, you may hate, but that is now the world we're living in here. So, guys, I guess the question is, what are we doing in the second half of this week? We have Thursday, we have Friday coming up around the corner. We have OPEX coming up right here, Tony. Markets are a little bit softer here after hours, 61.55 in ES. How are you approaching the second half of this shortened holiday week?
Yeah, Carvana came out down at expected move, down around $30. I don't think that's going to move the market that much here. The broader market, what you're talking about here.
Your son's going to be very happy, though.
Is he? That's right. You said he needed it lower. He needed Carvana, and what was the other one? Did you say Palantir also?
HIMS. He said he needed Carvana at zero to break even. So
right. He's got a little way to go.
A little bit more.
Volatility seems low. /VX under $17. Every time we have a downtick in the market, it doesn't lift its head up. If volatility doesn't lift its head up, again, Dylan, trading what's in front of me. If volatility doesn't lift its head up, then you can't have any extended down move. I would key on /VX. I like watching /VX. I like watching /VX when it goes higher and the market is going lower and then it stops. It gives you about an hour usually before the market kind of turns around and gives you a little bit of a play to the upside, or if you're looking to nibble on some stock that's gotten beaten up that you've kind of missed in the past. So for me, I think for the rest of the week, it looks like it's going to, it's setting up. I think the public call, which Sadov would call me right now, is to say more of the same. Nothing's on the horizon. I'm going to say volatility is a little bit lower. You might even be surprised with a little bit of an upward move here in the market for the expiration that usually goes to the downside.
It feels like everyone came into this week expecting some semblance of softness, even me. Like, I'm going to stay long, but I'm fully aware that this is a week where things could go sideways. You don't really trade the commodities much. Do you trade any of the individual names like FCX or
SPX?
FCX or like a Freeport McMoRan or like a BHP?
No, I haven't traded Freeport since I was on the floor of the CBOE. Got to go back to about 1986 to 93 or so.
That's a few years ago.
It's a few years ago. Yes.
Yeah. Time is moving forward here quickly. And
flies.
like that. Yeah, I mean,
you had stocks like Netflix that's been a leader in the market here, trade down to 1,025 earlier today. It's back up to 1,040 and change, actually up on the day. Meta stayed a little bit weaker. Apple's kind of been a non-event here. But even when these stocks were going lower on yesterday and today, the market chugged along like the rest of the market put it on its back. I don't see there's nothing on the horizon that I see that's going to shake anything right now. Not this week.
Yeah, equal-weighted S&P leads the pack today, outperforming SPY. Dylan, you and me are more of the commodity-centric folks in this room here. What do you think of this move?
Yeah, my thing is I look at the Russia peace play. I mean, I say that somewhat tongue-in-cheek, I guess, but I do have to wonder about an oil short, and I do have to wonder about a Dubai long position. I still just think you go back to, we've been jabbering for a few months about the Russian, peace trade. And Dubai being the mega winner, which the chart probably already has it. India being the mega loser, the chart looks like it probably has it. If anything, on the buy the rumor, sell the news, maybe you're actually buying India here and selling Dubai after all this obvious anticipation thereof. I do wonder if you're getting short oil, though.
Yeah, Tony, we've had a thesis here for the past few months since the election that in a world where there is an end to the Russia-Ukraine war, the neutral intermediary states that have served as finance hubs over the past few years would actually see expedited growth, because all of this money that's been trapped in Europe, thanks to the sanctions, is absolutely going to leave European shores once it's frozen. Russians aren't going to trust these European governments to not lock up their funds ever again. Right. So where's the money going to go? It's going to go to the places like Turkey, right? Istanbul. It's going to go to the UAE, Dubai. And then on the flip side, the countries that have made off really well because they've been the intermediaries for the trade as a Russian pass-through, Russia's no longer going to need them as a pass-through. So India would be the flip side of this, and their equity market actually has been hurt pretty badly since the elections over the past few weeks. They're up a touch here today, 0.38%, but the ETF is down from 54 to about 49.75 now, so we'll call it a 10% move. And we're seeing things like that play out. So consistent with that, we're trying to figure out then what happens with oil, because if the sanctions are gone and all the supply is coming back into the market, does it mean that the market is going to see all the supply being sold at market prices now, as opposed to, say, at $50 a barrel? Or does it mean that there's way much oversupply coming in and oil is going to drop down into a midpoint between the shadow fleets and the real ones? It's not your way of talking about the market, but this is like a theme that we've been talking through here and for like the past 4 months.
No, but I like it to go back to the whole commodity and currency theme that we gave, that maybe these tariffs aren't going to have the best effect as they had 4 years ago when he first kind of in his first administration, when he mentioned it, because the dollar is where it is. If you get oil lower, that's money straight to the consumer's pocket every week. Because listen, there's no better way that everybody gets in their car. This is America. We all drive everywhere. If it costs you $25 a week instead of $50 a week, that's $25 straight to your pocket every week. That's $100 a month. If you can get oil lower, as he has touted many times in the past, that could be a little bit of a boom for not only him, but policies that he projects. Again, just playing devil's advocate here. I would love to see oil lower just as a consumer. I think everybody wants to see any commodity that we use lower. Nat gas, I got to heat my pool this year. I don't want to see nat gas where it is right now. I mean, everybody's selfish in their own ways.
I would prefer to, yes, they just refilled my oil tank today, but thankfully I was able to lock in the price 2 weeks ago for today's delivery. So I avoided this big uptick here. That feels pretty good. You mentioned gas prices. Gas prices have been stable. Everyone's lower gas prices. We've been kind of just trading around the RBH5 contract. Unfortunately, not going to find an options market here. But in terms of just an indicator, if we think about inflation trades, which way the bond market's going to move, gas prices have been stable. They're sitting right at $3.164 nationwide. A month ago, they were $3.12. A year ago, they were $3.279 for regular. That's according to AAA. So they've been stable, right? Would we like them lower? Of course. But they have been stable here. So that is something that is maybe helping bonds. Tony, while we wrap this up, you and I found ourselves on opposite ends of gold recently. I've been staying long. I know that you saw a move higher and sold some calls. It feels like we've both been right to an extent because the market hasn't.
No, you win.
I mean, I was gonna say, like, you've been like selling some upside here, and the market hasn't done anything in like 5 or 6 days. So, like, how are you approaching this now?
It's bullshit. I'll tell you what it is. It's bullshit. They're just making me feel like I sold the top and I can hang in here, which I have hung in there right now. I'm still down a couple of dollars on my trade, but I feel good, which means I'm about to get my keister handed to me here in the coming days. I would love to see gold lower because I have a short position in gold.
That's it, Dylan. We're replacing the U.S. dollar with Bitcoin and gold. Are you getting on board?
I moved to Italy.
All right. Well, with that, overtime is out of
euros.
But you still get paid in U.S. dollars. You know, that's very smart, sir. Yeah, right? Yeah, you moved to a foreign country where the currency's weakening. You're good, You're good, Overtime's out of time for this Wednesday, February 19th, 2025. We'll be back, of course, after this with a video on demand of macro money. I'm on later today with Victor Jones for the Price of Truth in about an hour, so be sure to come back then. So for our star fill-in, Tony Batista in Chicago, and our usual friend, Dylan Radigan in Milan, I've been your mediocre host, Chris Vecchio in New York. We'll see you soon. Good luck trading.
Thank you so much for having me.
Thanks, Tony.
Two and a half Italians walk into a bar. It is Wednesday, February 19th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York. We have Tony Batista joining us for the first time in Chicago. Dylan Radigan in Milan to finish up this hour. Futures market closes at the top. If you're on YouTube, come join us on the website, the platform, tastylive.com. See what we're all about. If you're already on the website and the platform, come over to the YouTube chat. Tell us what you're trading today. What you think of that weird close. Market bumped lower by about 5 or 6 points there, right as the market reaches 4 p.m. Eastern. But that's not really the talk of the town here, guys. The talk of the town is how good Dylan Radigan's skin looks. Dylan, do you think the market
Listen, I got an Italian skincare company for you. You're looking to make a couple of bucks. I got no conflict of interest. I have no financial interest. I'm just an advocate. So if you're looking for a recommendation, you just hit me on Twitter after the show. I'll point you in the right direction. Okay, Vecchio?
I could use it. I know that. Vecchio's still young enough.
You're going to get a personal care package, Tony. I got you.
Thank you, brother. Appreciate it.
I will take one too. I see my future in both of you guys.
I'll tell you real quick. It's the rose petal face wash. Oh, so nice. And then it's like a GH. I don't even know. It's some sort of set of letters. It's related to a stem cell. And then it's like the stem cells of a baby Italian goat, I think. And then they put that. And
no animals were harmed in the making of this product.
No, the animals are fine at the end. It's okay.
Most certainly harmed.
Anyway,
for Dylan's youth serum.
Save it for later.
Tony, if you told me that Robinhood brought Dylan on the show to talk about rose petal moisturizer to kill attendance, I wouldn't be shocked at this point in time. But
you think this is some sort of a betrayal of the institution?
But my question is that tee-up is to say, like, markets here are pretty much closing at or near all-time highs. SPY certainly did. Triple Q certainly did. Dylan, what's the reason why we're finally, trudging through the muck here and poking into new all-time highs after several months of just churning sideways?
The end of global conflict as we know it. I mean, it's a changing. People can be as critical as they want to be, but at the end of the day, less war is good for peace, is good for markets. And I think that what you're seeing rhetorically and practically with the normalization of diplomatic relations between the United States and Russia, setting aside whatever other personal or political or diplomatic issues may be, I believe that normalizing relations with Russia is a step away from escalated global conflict, and that a step away from escalated global conflict is net positive for global economic activity, and I think the stock market reflects it.
Tony, do you think?
Wait, I'm going to give you that. I'm going to give you that, Dylan. But you got to go to the other side too. War is good for the market too, because 6 months ago, when we were full on and everybody was still doing their thing, then we're at market highs. It's just a cyclical rotation of things. That's really what it comes down to. I'm sorry, Chris. Go ahead.
But what does that mean? What does that mean? Cyclical rotation of things. I mean, that's a lot.
Well, I mean, here you saw it in Palantir today. That's been a stock that's been going nuts to the upside, and you get one. Hey, we're going to cut back by 8%. Big deal on defense by Trump today, and then you got Palantir sell off 10-15 handle and then rally back a little bit. I mean, you just go from oil-related stocks into consumer stocks now into something else. There's a market everywhere all the time. You could spin it any way you want, but really what is going on in this market, you're right. It likes the slop. It likes the complacency. Nothing's changed. Everybody still has their rights. It's business as usual. Until it's not, and we don't know when that day comes. So until that day comes, you got to play it as business as usual.
Yeah, defense contractors today. There's a few different ETFs that track these kind of things, but Shield is one of them. SHLD. I suppose that's a good name for a defense contractor ETF. Down 1.23%. Palantir, you mentioned, Tony, was off by 10.08%, and they've had just a remarkable run. It's one of the few companies that have just exploded higher here in recent weeks. Including a name like Hims. Tony, I think this stock is really hurting your son because he keeps sending me messages early in the morning about how he needs Hims and Carvana to go down. This is more of a question about like market mechanics, I suppose. But when you see something that was trading in more of a, kind of a consolidative range or meandering around for a few months like a Hims or a Palantir, and then it goes exponential like it has over the past few weeks.
Yeah.
How do you approach that when the vol shoots up and you reflexively want to just sell the calls?
Yeah, Hims is it's acting like a short squeeze to me. I mean, these last 3-4 days they don't end well, but they're certainly real painful on the way there. And if you have an existing position already that brings you some short delta, even if you started out as delta neutral, you got to buy the guts and sell the wings again, or change it to a call ratio spread if you still want to lean with a little bit of short delta, or change it to a diagonal spread, something that has defined risk to it. You just mentioned Hims. When you look at that front month vol with 2 days to go, it's around 180 or whatever, and back month vol is under 100. So there are intelligent trades to make in a stock like this that's gone parabolic to one side, but you're probably going to have to do it with some sort of defined risk. You still can have plenty of risk on, but defined risk. The hard part about this stock is if you have an existing trade. If you have an existing trade, one of the hardest things to do is close it and open something else, and I think that's what you have to do.
Yeah, sometimes you're just going to have to take the L.
Very hard thing for me to do. Very hard thing, I think, for anybody to do. New trader or old trader. We like to stick with things. I mean, because you want to be right. It's just human nature.
No, it is. We're all very loss averse. And, the studies on traders show that if we can gain $10 or lose 20, that's basically the break even point, right?
Yep.
But hey, like if I'd rather almost not lose 20 than to make 10. And,
earnings in 5 days in Hims too, February 24th.
Yeah, February 24th, right around the corner. Carvana has earnings coming up today after the close, so hopefully let's get that here. I haven't seen those yet.
It's $279. I don't think it's come out yet. Maybe it has. It's down $3 or $4. On a $30-some-odd expected move. I don't think Carvana's come out yet.
No, I don't think it's come out yet either. Dylan, you're our big Superglide fan. The Nasdaq's been holding up here and pushing higher. We're a few weeks removed from deep